technology industry and the fintech world. Today is a great day as we will be getting the opportunity to know many leaders, many innovators. And everybody, it's a big event. So since morning till evening, we'll be having some path-breaking presentations and panel discussions. So let's get ready for all of it. And gradually, we'll be seeing more people today. So I hope we are ready to begin this event. Are we all ready? Yeah? Oh, why such a low yes? It's a morning. Say a louder yes. Are we all ready? Yeah, that's like it. That's the energy we need for today. Okay, then. So I think we are all ready. And once again, I welcome you all here at Technoviti Awards 2022. And now, as the energy is set, I would like to welcome on stage for the welcome address our CEO and group publisher, Banking Frontiers Magazine and Banking Frontiers Live, the one and only Mr. Babu Nair. Everybody, welcome on stage. Mr. Babu Nair. Welcome, sir.
Very good morning, everybody. Great. So wonderful to see all of you. And after 2 years, we are doing this wonderful event once again. We assembled in this same place, same time, around in 2022 February. And there has been a vengeance to do physical events in the last few years because we have not had any chance to do any physical activities. We are all tired of sitting in front of the camera of the computer and trying to look into each other only through the digital mode. And today we are at least having this opportunity to engage, enroll, and work with each other physically through these events. Friends, first of all, thank you very much for making it for Technoviti Awards. This is a very long day today. We will be having the Technoviti Awards to begin with now, and in the afternoon we will be having the banking and financial services sector, which will come for Finoviti Awards. So in the first half, we wanted to honor, we wanted to discuss, we wanted to take perspectives of all the technology enthusiasts, technology innovators, and fintechs all over the country today through Technoviti Awards. If you all know, in the fintech world, there were about 26,000 plus technology innovation companies in the last, as per till last 30th December 2022. And one of the most interesting, 2021, sorry, and of which about 326 billion worth of business was done by them. And India alone accounted for about 6,300 or 6,000 plus 386 fintechs, and which did a market of about $31 billion in tech and payment. And last year was one of the best years where we had maximum number of unicorns, and of which 14 to 15 unicorns were alone in the fintech sector. Just yesterday, one more unicorn was born, Open, which became a unicorn. And we have a lot more in the pipeline. As I read, yesterday's one of the newspapers read that about 15 more unicorns in fintech alone are in the making. What a wonderful time to be in. And we are all in one of the best business of fintech today, trying to achieve what is possible. If you see the way the payment industry is concerned, or if I was reading some reports on the fintech, and about 25 to 27% of the total fintech is basically in the area of payments, and similar number in the area of lending tech. These are the two most heaviest technology sectors in the fintech area that are available as of today. And from there, the wealth tech is coming up. Insure tech is beginning big time. The insurance industry, which is hardly 2.5% of the GDP or the population, is basically having so much of potential to grow in a country like India. We have hardly about 65 odd insurance companies in India compared to a country like North America or US, which has got 5,500 plus insurance companies, or a Canada, which has got 535 insurance companies. That segment is so huge. And trust me, with the kind of frauds that are taking place in the country, cyber insurance has become so important. That is another major area where the fintechs have a big role to play. So there is a plethora of opportunity in this area, be it in wealth tech, be it in insure tech, be it in payment tech, be it in lending tech. Now lending tech has become too crowded. Now the space is for people who are going to be really innovative, who are going to be really different. And that is where we need to see what difference we can make, what kind of innovation we can bring to make this fintech revolution a true explosion for the industry. This Technoviti has always been, we started this Technoviti somewhere in 2013 when we began seeing the amount of interest in the technology sector. I was in Singapore attending an event called as Seamless Asia. And that is where I picked up this idea of why not even honor the technology companies. We started Finoviti in 2012. 75% of the innovations were technology based. So we said, why don't we honor the technologists also who are actually going to power these innovations in the financial sector. And that is how we brought all this Finoviti and Technoviti together. Till now, we used to do it as a separate event where Finoviti was separate and Technoviti was separate. But today, we are combining it both together so that since we are doing it after so many 2 years of time, let us try to bring the best of the breed together and enjoy together. That is what we have tried to do in Finoviti and Technoviti. This also happens to be the 20th year of inception of Banking Frontiers. We started this in February 2002, the Banking Frontiers movement, which started as a magazine, then went into events. We started doing smaller roundtables and gatherings with some of our good friends in the industry who were general manager, deputy general managers, who all rose to become the chairman, CEO and EDs of the banks. And today also, one of the most interesting thing we do is every week we have a roundtable with the CXOs of the banking and financial services sector. That has been keeping us up and running most of the time, and we have included fintechs now. Moving forward, every month we intend to keep one fintech day by Banking Frontiers every time at WeWorks in India, in Bandra Kurla complex, where we want to take one subject matter, maybe say InsurTech, or maybe cyber insurance, or maybe we will be taking lending tech, payment tech, one per month, and we would try to bring all the fintechs in that area together to present to some of the leading bankers in the industry. So this is the next initiative we are trying to take over. A lot more to come, but it is all possible only through your support. It is only possible through your participation. And we want to make sure that why only 6,000, we should have 10,000 to 15,000 fintechs coming in India in the next 2 years' time. And we want to see more and more fintechs becoming unicorns. And we have already a list of 15 unicorns here, which are slated to be the unicorn. So friends, have a great time today. Let us try to understand more about how to grow business together, how to engage together, and take things together to the new level. I'm also grateful to Team EY, who has always been supporting us in this initiative of Technoviti right from the day one of Technoviti, and Mr. Sachin Sheth, who has been the partner of EY. He is now the former partner, but just from yesterday, but he has been standing behind us like a rock-solid wall, which has always been supporting this Technoviti initiative and helping us in bringing out the best of the innovators to the fore. Without wasting much time, I would like to thank all of you and move to the next session, where Sachin will share a small address, followed by which we will start the session. I'm handing over to Vyoma again. Thank you very much. Welcome all of you once again, and have a great time. Thank you.
Thank you for the warm welcome, Babu sir. Thank you very, very much. And everyone, I'm sure you all must be thinking what this year's Technoviti is all about. You must be having a lot of questions. So yes, it's time for us to answer all your questions that's going on your mind. And for this, let me invite on stage our former partner FS and FinTech EY India, Mr. Sachin Seth on stage, who will be giving you all the overview of Technoviti 2022. Everybody welcome on stage Mr. Sachin Seth.
Good morning, everyone. Good morning. Happy to be here after almost 2 years having the event in a physical setup. And I'm sure the hall will get filled up a lot more as we have the sessions coming up. So first of all, thanks to Banking Frontier team, Babu and Manoj. We have been, as a EY, associated with Banking Frontier for the last couple of years, supporting this event. And personally, I have been, engaged with them in every initiative they have taken. And really, it's a great experience always working together with them, right? As Babu mentioned, I just moved on from EY, and that's why it's a former partner. The event was supposed to be planned, it was originally planned for April, and I thought I will complete the event and move on. But as the event extended by a few days in the logistics planning and all that, but I thought, on the request of Babu, I thought I'll just come and still give our insights of Technoviti 2022 and then hand over to my other colleagues who will continue the tradition for future as well, right? So as Babu did set the context, we do have lots of activities happening in the fintech, big tech, and the whole financial technology domain. And Babu did talk about some of the areas which are, coming up in a bigger stream. So we thought this year we should bring as much as flavor of that to the event, and luckily we could have good participation. So we had about 30 fintechs and big techs or tech companies who participated in the showcase to the jury, and there is an eminent jury which you will see the details in the compendium and the website. So there was a physical so it was hybrid mode. Basically, some of the fintechs and big techs who could come over, they presented in person, and otherwise it was online. And there was quite a bit of sort of insights coming from there in terms of, variety of companies which came over, right? So companies were in, AI, ML, data, consumer lending, using various kind of sort of, technologies and the processes to basically see how the whole, the technology piece, or basically the banking and financial services piece, gets more and more efficient, right? So we'll talk about it during the day, as Babu mentioned that, some of them have been selected by jury as the winners in their categories, and those winners will be announced in due course, and there'll be recipients who will be receiving the awards from those companies, right? In addition to that, so within that process, I just want to also share with you that, as we did the jury briefing, etc., and every year we try to improvise on that, we had this year as a theme for 4 components to select some of these awardees. Now, first was the innovation of the solution. And I also want to highlight here is that this award was selected or given to people based on what they have done in last 12 months or so, or maybe 12 to 15 months, right? It's not that if they have done something 3 years back and they are coming and showcasing the solution, because Technoviti has been there every year. So we avoid repeating the same company. They may have built a great solution, but if they have been showcased in the previous years and if they have been awarded, obviously we would not like to have the new players coming in. So we have given chance to a lot of new players. So all the awardees who are going to get awards today are primarily the solution providers who have built the solution in last about a year or so, right? And that's where the innovation comes as one of the key point in terms of whether the innovation could be related to COVID, could be related to various kind of sort of technologies they have used, or could be related to any kind of efficiencies they have brought into the process and improve the customer experience, right? Second is the exclusivity of the solution. Now, obviously, as we see that, the fintech space is growing significantly. There are more than 50,000 plus fintechs. So naturally, there are many of the fintechs are lookalikes. Now, it becomes very difficult to assess, evaluate, and see that, the idea may be somebody else, somebody has taken it forward, etc. So we have also looked at the solution exclusivity, that how much they are able to add their own value to it and to be able to make it exclusive, right? Third is scalability. As we all know that, many of the fintechs are in an early stage, they just have MVP product, they are engaging with the clients, they have done some POCs, but they need not necessarily have been able to scale up. So we have also seen that even if they have not scaled up, the jury, which was comprising of people, leading eminent sort of thought leaders from all the segments of the industry, we have also seen that whether they are confident that the scalability angle can be taken up, so that when we are sort of awarding a company, naturally the company should have all the right ingredients to be able to scale up in the market, right? And then fourth, and one of the key important point is the business impact, right? I mean, we all are living for technology, for developing things on different technologies, etc. But at the end of the day, what is the business impact it makes, right? Does it improve collections? Does it improve underwriting? Does it improve distribution? Does it reduces the cost? So what kind of business impact it makes, either on a solution provider's business or on basically the end consumer, right? So these are four things we looked at it as a part of the jury, and we did that. So without getting into too much of detail, I'm sure you will see the awardees during the later part of the session. Other than that, I think in Technoviti, what Babu covered, just wanted to cover that we have lineup of panels and the presentations, and I'm sure you'll find them pretty interesting. So the first panel will be a combination of basically the fintechs, people with regulatory expertise, as well as the investors. And then subsequently, we have the panel more focused on the technology, and then we have basically the knowledge sessions by also our partners, right? So with this, I would like to just conclude my opening remarks, and thank you so much. Enjoy the sessions, and we are all here during the day. So in case of any questions or any clarifications, please feel free to ping us. Yeah. Thank you so much. Have a wonderful day. Thank you.
All right. Thank you so much, sir. And now moving on to our first panel discussion of the day. So everyone, now the first panel discussion of the day is on the topic, the investor outlook today. So for this, I would like to invite all our panelists, the speakers, and of course later on the moderator. So everyone, I request all of you to kindly welcome all our speakers and the panelists with a round of applause. So let's welcome on stage firstly the Partner Investments Mumbai Angels, Shivangi Bubna. Now I'd like to invite on stage the Chairman, Fintech Association for Consumer Empowerment, Ram Rastogi. Now let's welcome on stage the co-founder and CEO, earlysalary.com, Mr. Akshay Mehrotra. Our next panelist is Partner Venture Fund, Verenium Capital Advisors Private Limited, Aparajit Bhandarkar. Our next panelist is the CEO and Managing Director, Shrikant Patil. Our next panelist is CEO and Founder, Vivify India Finance, Anil Pinapala. Our next panelist is the founder, Tutis Advisor, Mr. Prateek Agarwal. And now, last but not the least, let me invite our moderator for this panel, the former partner of FinTech and digital leader EY, Mr. Sachin Seth. So now everybody, let's begin the first panel discussion, the investor outlook today. And I would like to now give it over to our moderator. Over to you, sir.
Thank you so much. Thank you. Good morning to you all again. So really big panel. And, happy to have all the eminent panelists here from investor community, from fintech startups, and also the thought leaders like Ram, who represents his point of view on the consumer side, your consumer protection side as a chairman of the FACE, as well as his expertise on the regulatory side, right? And starting with a lighter note, as we have seen in last month or two, that, when we have investors and founders in the same room, there is a lot of heat going on, right? I hope we won't have that heat translated here in this panel, because I don't think the investors and the founders belong to the same portfolio company, right? But yeah, that was on the lighter note. I mean, there are lots of good things happening, but yes, obviously there are, sometimes aberrations, and I think it's a lot of learning for all of us in the community to know and see that, when things go wrong, what to learn from them for the future, right? So anyway, coming back to the panel, we have about 45 minutes, and we would like to do justice to that with having all the eminent panelists from different, background. So let me get started with our investors first, right? Because they have the money, right? And so just going in, taking a point of view from investor side, basically, with all the things we hear, we talk about that so much of capital flowing, so much of liquidity being there, so much of investments happening. And as Babu talked about 3 days back, we had a 100th sort of unicorn from India, right? So what's their point of view, right? I mean, is there really easy capital available, or are they under pressure to deploy the capital for better returns, or what's going on in their mind? So maybe it's an open-ended question, but let me start with Shivani and then going in sequence with Prateek and Aparajit as well. That what's the investor's point of view at this moment as far as the fintech ecosystem is concerned, and what's India is facing, right? Shivani, starting with you. Yeah.
Thanks so much, Sachin. I think what we've seen in the last couple of years, especially since the onset of the pandemic, is that the investor at the early stage, which we represent, has become much, much more of an informed investor. So the questions are deeper in terms of the potential of the product, in terms of the capital efficiency, in terms of the expected returns that the investor can get, and also on the scalability. So at the stage that we are looking at, it's no longer that, it's a great idea that sells. People are looking at the viability of the product. It has to probably be a high price, high volume game is the best one, but at the worst case, if it's a low price game, then it also has to be a high volume game. So we see that shift in the investor behavior. In terms of trends, what we're catching is, I know AI/ML is a bit of a bad word because everybody uses it, and not too many companies actually do that kind of tech stack build up. But we actually believe that this is going to be a bit of a game changer, because never before have we actually had access to so much data uniformly. So if there's one big game changer for fintech, it's going to be the application of blockchain, looking at data in a more decentralized format. And companies which are leveraging these would probably set the trends in the years to come.
Thanks, Shivani. Thank you. No, I think, as you rightly said, AI/ML has been there in the sort of theme as investment, but I think now it's coming really to of age in terms of maturity and in terms of clarity, that what we can expect out of it and what kind of companies are really capable of building it, right? So, Prateek, from your point of view, on the same question.
So I think, yes, party is over, looks like, right? And there's definitely stress being seen on the valuation front, on where the investment is coming, right? It's not anymore on the idea. It's more on the execution capability, which is directly linked to the founder credibility, founder pedigree, the experience. And most of the money is also being considered to be raised by people who have reached the 0 to 1 and 1 to 5, right? When you look at 1 to 10 scale, right? Somebody who's built the business, somebody who's have a product market fit, and the business looks profitable in some time. So it need not be profitable immediately, but at least in probably the near future, right? So it's a combination of founder, it's a combination of business model, it's a combination of the timeline. So if if startups are able to build faster with probably an acquisition, right, most of the money is also coming in for acquisition. It might not be just the team, because you have the team, you have built everything, but to go from 5 to 50 and 50 to 500, right, do you need to really acquire? So I think the thought process is more on consolidation now, right? And it's not something which is happening now, it's a cycle. And we have entered the cycle where now efficiency will play a very important role, especially in fintech, where spending money on customer acquisition is done, right? So all those companies who had raised money for the hook for acquiring the customers, I think they now need to start building on the core product, the core revenue streams, which can be anything from lending to insurance to cross-sell to whatever. Right, but execution is the key for next 12 to 18 months, and founder pedigree is what investors would love to bet on now.
Sure. Thank you, Pradeep. Aparajit, your thoughts?
Yeah, so two things that are there. The market, the way you look at it is, split between the public markets and the private markets. The public markets have already seen some contraction, and it started in the US in November. Markets peaked in November, and then, there has been, obviously yesterday there was a Fed fund hike. Consequently, there is compression in the public markets. And, there was some of the valuations were quite exuberant in the tech space. Those are getting crunched more than other areas. So that's having a knock-on effect on the private market. And the private market is the knock-on effect. The largest amount is on the Series D, Series E and above. And then there is a knock-on effect on the Series A, B, etc. So that compression is happening. The impact on seed stage and early stage is less excessive compared to what is there in the public markets, but it is still there. And I think there is an opportunity to find good founders. I think in last year, second half of last year, the valuations have become excessive. I mean, some of the founders were just coming in with ideas and talking of $10 million for seed stage companies or $20 million for seed stage companies. That is now not happening, and consequently people like Shivani mentioned, people are looking at profits, people are looking at numbers before they're putting money in.
Thanks, Aparajit. No, I think that's a very good point of view from global perspective also. So let me come to the fintech side, and we have very successful fintechs here. So let me start with Akshay. Akshay, you have built a beautiful company very aggressively in a very short time, and you have gone through the cycles of sort of bootstrapping to fundraise to expansion to growth and everything. So from your point of view, I think the point what Aparajit made, I'll just pick up from there, that we saw that most of the investments were happening about number of customers, customer acquisition, expansion, growth, etc. What has been your experience, the balancing between the profit-oriented approach, though it may be a little bit far in sight, versus just building a company and being sort of the lead player in that space? How do you see that evolved, and and where do you see it's going from here?
Thank you. I think let's first start off in saying how does the fintech lending space evolve in the country. I think most fintechs are 5 to 6 years old when we started off saying that we want to democratize credit. Right? And of course, many new innovations kept taking place today. But I think one of the clear components which happened was the liquidity crisis followed by COVID, which actually enabled companies to get very distinctly distinct. There are either guys who know how to do this business at scale and then come out and emerge really well, or there are companies who are doing niche businesses only left out. So if I look at today, I think pre-pandemic, there were almost 300 to 400 digital lenders in the country. Today, that number has become a handful of companies who have scaled business to some level. Now, these companies who are scaling business to some level are getting questioned on the following elements. Are you really attracting a business model which makes sense, which means you're able to disburse money as well as able to collect money and be profitable in the enterprise? The second, are you able to demonstrate hyper growth? right? And third, are you able to then become a larger ecosystem player? Because when you look at financial services, it's not about giving money, it's about providing liquidity and creating more money to deploy and build in ROE efficiencies. Right now, that becomes one of the most important component of building a fintech business. Today, if I look at a business like ours, we have now done close to 6,000 crores of disbursement. We have successfully managed to give 3 million people instant credit within a minute across the country. But what's more important, we were able to collect all of the money that we gave, and cumulatively, let's say our write-offs till date have been less than 65 crores. Right? It's a business which has never been heard of, that in lending you could have such low business volumes, such low NPAs coming in. At the same time, business is profitable. Post-pandemic, the business has grown 7 times. It's also been now coming into glory because partnerships with banks have come in to provide the liquidity systems coming in, right? You can only go and serve millions of more people if you start becoming the ecosystem player. And once you become the ecosystem player, automatically capital starts chasing you, right? Today, the questions which, let's say, forthcoming investors ask, what is the ROE efficiency? How strong can the ROA levels come in? How large can you build this business? Can we look at building a business where you talk about $3 to $4 billion AUM? Can you build out businesses in that speed? Start challenging financial services, not from just banks, but new age companies who will run businesses far more efficiently, less number of people, using hyper technology, using capabilities of servicing to a consumer which otherwise could not be serviced in the traditional world. And I think these are the areas which cause market leaders to get emerged. And I believe in the next 18 months, you will see 15 unicorns emerging, primarily because they go and service so many consumers in a good manner that capital chases them so that they can chase the value and their efficiency of that money that they invested comes out.
Right. Thanks, Akshay. No, I think that's a very good insights from the experience, what I think early Sally has gained. In fact, on a lighter note, again, I mean, I do like to bring a little bit humor to it so that, people relate to the conversation we are having. Most of the time when we talk to the founders or investors, they say in wealth tech, people don't want to give money. In pay tech, they don't want to pay the money. And in lending, they don't want to return the money, right? So the point is that, how do you build companies with a profit as a motive, even though it's a distant, on the roadmap, when the consumers are not willing to pay for the services, right? But we'll come to that topic subsequently. I thought I'll just bring it up when you talked about fantastic collections and low delinquencies of early salary. I think there has been sort of a lot of, challenges on that front also for many of the fintechs, right? So coming to the younger fintech, Shrikant, your company, DJLI. Now, you have heard that, what investors are looking for, what's their outlook, what they have learned over a period of time, what, seasoned founders like Akshay has been able to sort of build and how successfully he has been able to do. But for young entrepreneurs like you who are bootstrapped and who are sort of looking at balancing between the time they spent on, building a company and also pitching to investors, which I see more often than building the company, right? So what's your thought? How do you see the support coming up from investor community, or what do you think is something which a company will, what you're building will make it successful if you get a support from investors, and what kind of investors? Yeah, please.
No, very important, Sachin, and the way we look at it, and I've been, just to give you a brief about DigiLi, we are a Singapore-based fintech operating in access to finance for SMEs, and largely enabling them to reach banks and having the right kind of perspective coming from the lenders instead of they trying to struggle to create an impact. We look at it, because I've spent a lot of time and around 20 years in the consulting world. We look at it as a relationship with the investor. It is not about a transaction. It is about how can people whom you are going to take money from are going to also contribute in more than the financial ways how can they align to your thinking, how passionate they are about the mission which you have, right? So it's about building that relationship, and to a certain extent, what you said that a lot of time is spent in building the thought process around it. What we have learned through this is you could pivot the model, with the feedback coming from investors. Like one of the last conversations we had with one of the angel networks. They said, hey, we love the founding team, we love the this whole setup which you have. Can you just pivot it? We will invest if you pivot it to this platform. Right? It was going from B2B to B2C, right? And we just had to hold back and said, look, we are committed to the idea, but we also want you to see what we see, right? And build that relationship with them. So it's a process where talking to an investor is also a learning, because then you go into a lot more details. It's as Pratik mentioned about the execution piece, the fundamental assumptions may your projections could be anything, right? But the fundamental assumptions, the level of detail which you can think about on even how much you're going to spend on marketing, right? In year 1, year 2, what will be the channels you will use? It's becoming much more real. These conversations are much more real, and we look at it more as a relationship which we want to build over a period of time. So some of the investors have come to us and said, hey, we're not going to invest you in the seed round. We want to talk to you in Series A, but we want to build that relationship with you now, so that we have the we understand each other better, right? So that's how we look at it, more fundamental than just having a transactional interaction.
Sure. Thanks. So, Anil, coming to you, I mean, you have been in the lending space and for a particular segment, right, which is basically under penetrated from credit perspective, and you are also not only giving them small ticket entry-level loans, but also helping them build credit score, etc. Now, we have seen that this segment has been talked about in various reports, various kind of projections, in total addressable market, in various pitches. But when you actually execute it on ground as a digital lending fintech, do you find it overcrowded, or do you think still there is a space, or what are your immediate reactions to right now what's happening in the market as far as this space is concerned?
See, the market is large, obviously. It is unaddressed by and large. And when we look at the addressable market, obviously everyone talks about the next billion, next 300 million. But there are truly more than 300, 400 million Indians who don't have access to formal credit, formal institutional credit. And we are just scratching the surface. Like, what we are doing is at the tip of the iceberg. The ability for us to grow in this business is immense, but the ability for more people to innovate and more people to offer services to these underserved customers. When we are talking about underserved customers that we offer under our FlexPay brand, we are talking about customers with incomes below 20,000 rupees. More than half of our customers have an income below 20,000. More than a third or fourth of our customers have income below 10,000 rupees. You should be able to give a sachet-sized credit as a lending platform, but there are other services, be it insurance, be it payments. It should be catered to that consumer. It should fit their needs. And when you're addressing that particular market, you should be able to innovate. The innovation is not just, I have identified a market, but it's in product. It's in the consumer experience. It's how you are able to engage with that customer. So the way we have designed our product and given them a line of credit and given them access on a continuous basis where they're able to interact with, meet their credit needs, but as they keep making payments, are able to increase their credit score and hence have a much larger value that they gain than a 2,000 rupee loan or a 25,000 rupee loan or a 2 lakh rupee loan that we give to them is very important. And kind of touching on some of the earlier themes, See, lending in terms of the market being crowded is always never true, right? Like, lending is not a business of growth equity. There is not a single winner typically in any lending market. It is something that lending is not an equity-driven business, it's a leverage-driven business. So one portion is to raise equity, but unless you are able to lever up with adequate debt, you grow a lending business with lot of debt. Equity is a small tool in your growth. So unless you have that perspective that you are able to raise the right amount of leverage on the equity you get, so that you are able to build a loan book and build a customer base that is able to access that credit. So there is a lot of scope for a lot of players to be successful in this market. And even if you look at mature markets, even in the underserved segments like US, where we have built a large lending business there, and that's where we come from, the digital lending business for the underserved in the US has 20, 30 successful players, some of which are listed and are billion-dollar valued, but some of them have revenues over few hundred million. So, and in the US, the underserved market is 30 million. Here we are talking about 300 million people. So the scope is immense, the market is large, and it's not a zero-sum game.
Yeah.
It is not like a search business or a social media business where there is one winner. And depending on this market you address, and depending on the customer segment you address, you will be able to build a large successful business in India, and this is just the beginning of it. So I see immense potential for us and for anyone else who wants to innovate in this space.
Great, great. That's wonderful, Anil. So Ram, coming to you, I think we heard point of view from investors, we heard from fintech founders, players. Now, there are a couple of issues I want to bring to your table and wanted to get your point of view. First and foremost is that, because there are so much of digitally born companies are there, and many of them have changed the way we live, right? The way we operate, the way we, consume things, etc., which is wonderful. But on the other side, there has been always like a push and pull happening with the regulator, right? And I'm talking about whether it is digital lending apps, which have had challenges, and there have been sort of consumer-related issues. And I'm asking this question to you from both angles. One is regulator side, and other is also chairman of consumer sort of protection group point of view. And also, if you see even other areas, like I'm just giving an example, not that specifically, but let's say neobank or others, there is always a gray sort of line, right? And then it's happening in the you see basically in the crypto also or other side. So what do you see? How does fintech ecosystem aligns with regulators better, or how we are able to make it in such a way that there is investors are also protected, at the same time consumers are also protected, because at the end of the day these are the two impacted parties if something doesn't go right. Yeah, please.
So yeah, thank you very much, Sachin. I would like to give you a different perspective as a common man. 63,000 startups in this country registered with Government of India. Success rate is not even 16%. That means out of 100, only 16 are successful. Now these people, they have an idea. They ideate, they innovate, they incubate. When it comes to investment, there's nobody to guide them. The investors are not looking at them. If you see the investors across the globe, there are two kinds of people who are impact investors, like and abroad. They believe in unit economics, efficiency, lean growth, as well as that environmental, social, and corporate governance. They also talk about profitability, and they also talk about sustainability of the business. 100 unicorn in this country, the valuation is about $330 billion, but the investment they have received only $90 billion. That means there's a gap of $230 billion. Either the valuation was wrong, either they don't have the capital. You have to decide. The time has come that we stop talking about unicorns. 550 unicorns in USA, 179 in China, and we have 100. How many are successful? How many talking about corporate governance? Last 6 months you have seen, you have read in paper, a lot of problems there. how the things are moving around. When you talk to any of the fintech, they say, who is RBI? It's my business, I am doing it. They are storing the data, they are monetizing the data. Yes, there is no clear guidelines for Data Security and Localization Act. But as a responsible citizen, it is our duty to see that we follow certain rules. And the same thing is happening, that when RBI comes with a circular, they come and abuse the things. So it is a job, it is a responsibility of organization like us, which is faced. Various incubators like IAMS and all, they should teach, they should educate the people, 63,000. Imagine one startup has got 10 people, 1 billion people are there whose job, whose nurtures, whose dream are at stake. I'm talking from their side. How we are going to address to that situation? There is RBI has created a RBI Innovation Hub. There are every IIM, every IIT, they have the incubation hub. So we should see that how these being nurtured. If they are having any wrong thing, let's correct them so that they should not have any surprises. Now, with digital lending, I am coming to, RBI is coming out a very stringent circular. And they have already given a circular for microfinance, the circular has come. They are saying now that if you're going to recover from the borrower, you have to decide a time and place where you can recover the money. No more social media. Now, in this situation, I'm not saying that there are good people, there are bad people in the industry. But how you are going to do that? Tomorrow, the RBI says you cannot charge them more than 30% interest. The entire economics, unit economics go haywire. So that is my submission to you guys, that we responsible, see to it that you are moving in the right direction and you are creating an impact in the society per se. You are not there to make money. You have certain responsibility to see that, yes, the system is being created which generates the employment, which creates the sustainability, and take the country to the forward. Now, Modi is talking about 1,000 unicorns. Another 900 or 1,000 unicorns are there. He talks about decacrons. But what they are doing, are they making money? Are they creating anything? Imagine in Germany, there is a company for the air taxi, it works on battery. The company's name is Lilium. It's a profit-making company. Sustainability, people are happy. They are getting much more participation in the business. Other companies there which works about vertical farming, in-farm. In India, we do not have, because all the ideas, they are being killed. Only two people are getting money here, either the e-com players or the digital lenders. Because our investors per se, they are a reformed version of money lender. They always believe in mezzanine financing or some kind of, now the debt lending has come in the system again. Why we are not investing in a new company? Why a new thought is not being given some amount of money? Make sure that 10% of your investment goes to them. And you see then you're creating an impact in the country. Thank you.
Thank you, Ram. No, I think that's really, really wonderful insights. And absolutely, and I remember in one of the events I was attending a couple of years back, Mr. Rashesh Shah, chairman of Edelweiss, said that, a car requires a brake and accelerator both, right? If you don't have a brake, you can't only run car on accelerator. And I'm just trying to convert that analogy that, while we need a hyper growth, while we need all sorts of sort of innovations and sort of ideas, it may be crazy ideas, it may be capital being put in them, but then we also need some amount of sort of balancing that when we are going out of control, we need to have a little bit of a break to, slow it down and put it in a right path, right? So, really good point what you made, Ram, and I think in fact, in our Technoviti Awards, when I spoke in the beginning, in opening remarks, you would have seen that, I talked about innovation as a first point. So whatever companies who pitched to the jury, and Ram, you were part of the jury as well, I think innovation was one of the area which was looked at with a lot more sort of a scrutiny, because there was no plan to have Me Too kind of players, right? There has to be a differentiating factor. There has to be something which is coming out. Business impact comes along with it, right? So perfect. So, Aparajit, coming back to you, and now that we will have a limited time, so I'll go a little bit rapid fire rounds to keep everybody a little bit energized. So Parajit, based on the conversations, what are your predictions, right? Top 3 areas you see where investors are going to, be more comfortable investing, having the learnings what they have had in last a decade or so, right? Could be anything. It could be, talk about financial infrastructure, could be wealth tech, could be digital lending also, which is, I believe it is sufficiently funded, but that does require constant capital for further penetration, etc. So I have 2 questions. I'll go in a round. So the first one is that, 3 ideas, what you think, where you are going to put the money as an investor, and from founders' perspective, the 3 ideas they want to give it to the audience or the young people. The people should be sort of looking at that as a virgin territory or a blue ocean, right? And then I'll come to the last question. Yeah, please, Aparajit.
Yeah, so 3 areas. First is, I think, payments as an area, though we think that it's quite penetrated, will grow from about $2 trillion of payments in the current year to probably about $10 trillion by 2030. So there are going to be a lot of new payment players coming in. And RBI is actually shaking up things by looking at the current payment players and their practices, and going to look at which ones will are following certain compliance norms, and we are seeing that in the newspapers also, and I'm glad Ram brought it out a bit in a different way, but they are actually going to, so there are going to be newer payment players who are going to come in, which are going to be interesting, and thematic payment players as well. That's the first one. I think the second one is infrastructure rails across the country, which will be doing things both on the lending side. So for example, account aggregators, that journey is beginning, where the data protection is being built, and people will be able to monetize their data to get access to financial resources. And the second is actually on the health side, there is going to be a lot of changes happening, where health insurance and health tech are going to get combined to give certain empowerment to people. So those are the 2 themes that I had in mind, and I think I would say those are the 2. I'd leave it to the others to also.
Absolutely, absolutely. So Prateek, with you. Yeah.
So I think, to me, I would slightly look at, slightly matured startups and founders, right? Because the way we are moving towards in next 3 to 5 years, it's all going to be consolidations. You might have a hook for something, but eventually it's going to be an overlap. And that's what you were saying, right? Lookalikes, there are a lot of lookalikes. What would really differentiate the sustenance, scalability, would be the founder capability and his understanding and, the way, the DNA also, I would say, right? Because how is he able to adapt to changes which are very often and rapid, right? If you want to be in the fintech business, you have to be somewhere regulated, which is a clear direction, and it was coming. Somebody who wants to build a business without being regulated, I think they should be out of it. So somewhere you would be regulated, either being a payments, fintech, lending, etc., and in 3 to 5 years, people will do everything, right from lending to cross-selling of insurance to PLs to business loans, and you can have multiple other phases of EMI-driven or tenure-driven or partly secured. These are just products. So I think for me, it's basically the founder, right? And the model where we also work is primarily on the operator investor model, right? So we just don't give money and leave it for the founder to figure it out, right? Spend a lot of time with him. So I think that maturity is also there, that founders need to know, how much they can build it themselves, right? And where do they need help with from the external world? You can't hire everybody. You can't be a champion for everything. I think that maturity is also being seen now, right? Where where you are agile, right? So I think for me, product is something which has to move probably on a 5, on a 10 scale, it has to be somewhere around 5 to 7, where you have a product market fit, but eventual scale and returns and whether you will be able to sustain till unicorn or decacorn, etc. It's completely on the pedigree.
Sure. Thanks, Pradeep. Wonderful. Shivangi, from your point of view.
So, in my view, I think firstly, when we talk about the 2030 GDP forecast, where we're talking about multiple trillion-dollar economy that India will be, I think a lot of that will come from companies which are not even born today. So here I'm not talking about the unicorns, I'm not talking about the people who are already raising money, but building from what Rama said, it will come from companies which are not born today. So I think some of the key themes which are trending internationally, which are probably not popular in India yet, a lot of it is around stakeholder capitalism on ESG. When I say ESG, I guess when we relate to fintech, one of the key themes that come around are data security, cyber security. I think that is going to be a big theme for the coming years. It's already there globally. It's picked up in niche markets like Israel and maybe to some extent in the US. But I believe that it will translate to India. Also, I think if we were to only stick to the fintech theme, then I would say also regulation tech, regtech would be another key theme. I think it all boils down to good governance, because what differentiates a good company from a bad company is actually the corporate governance. And once that is in place, it's what makes companies scalable, makes them successful, and also makes them profitable. So I think profitability is going to be another theme that will emerge in the next few years.
Great, Shivang. I think profitability is really, I think, one or two events in the industry, whatever has happened, and primarily public companies, I think that's really brought everybody to the profitability point. And I'm sure a lot of people are happy about it, because they were wanting to go that path, and they were probably looking old-fashioned. Okay. So coming to Anil, what do you see to the youth or the youngsters who want to enter, who want to become entrepreneurs? Where the opportunities are?
See, there are several areas. Obviously, I don't want to give my ideas out. But I think talking about a large area level, blockchain is a huge opportunity area. Everybody is looking at the most maligned use case of it, which is the crypto assets and the cryptocurrencies. But the technology itself has a huge potential. And that will be an area that will be a growth driver for us as an economy. So that's one area that everybody should look at, especially if you're a young entrepreneur trying to build a large company. The second area is liquidity. I just use that term very loosely, in the sense there are a lot of assets which do not give leverage and liquidity to the owners of the assets. And if you're able to innovate and are able to, in near real time, provide liquidity on assets that are not liquid today, and are able to give leverage to the owners of that assets, and that's something that I'm working on, and still I'm saying it aloud, but there is a lot of opportunity in that area. The third theme, as a fintech digital lender who is licensed with RBI, with NBFC license, and growing rapidly, as we are growing and we cross each 1,000 crore threshold, the RBI requirements in terms of compliance and regulation are so immense. And it's not just us, Akshay is in the same boat. As we are all growing, there is a lot of requirement for compliance and regulation that needs to be automated and built for the digital companies. The banks have it, the traditional NBFCs have it, which is all consulting driven. It should be technology driven. So there is a huge regtech opportunity to both on the payment side, lending side, insurance side, where any regulator is involved, be it IRDA, be it SEBI, or be it RBI, that requires a lot of digital-driven approach for compliance and regulation. I think that regtech is a huge opportunity as well.
Excellent. Akshay, from you, you have already scaled up. Now you want to give away some of your ideas, right? I mean, you have to do some social.
No, I think I always tell any new founder, right? come to us if you want to experiment something new, and we'll make sure we'll at least run the first POC. Right? And I believe in that part, because we are innovating to challenge traditional entities doing financial lending, right? Unless we innovated, it could not become better and more efficient. Right? Today, if I look at OPEX efficiency, it's like 350 rupees a customer. It's unheard in banking, right? But when I go back and say it's only enabled because we went to every innovator and said, come test out what you built. Right? And that is like an open house. There are at least 30 companies doing POCs with us at any given time. Right? And we have a singular product. On our app, we give money. Primarily, right? But underneath the number of people who keep coming and experimenting, so we can cherry pick the one which can be scaled to a very large level comes in. And if a fintech can use it, definitely a bank can definitely use it much better. Right. So first is a testing ground, and I would suggest innovators to come and work with fintechs as their first clients, because they have underneath large volume customers ready to test out and openness to test new things. Complete open architecture. The second part is there's a lot of work happening in Web 3.0 or 3.0. Right? And the world has changed from AI, ML to actually going saying what is the entire internet technology changing to 3.0? Do you have knowledge systems coming in? Because players like us are willing to move in those directions, which means the innovation is going to be accelerated. What technology we saw in the last 15 years, the next 18 months is going to see a complete new wave. So early innovation started taking place. Today we see so many new startups coming out who are like very early stage, innovating out of India or innovating out of US, but they're talking about 3.0. And the third, which is more core to our business, I would say it is embedded tech. And embedded tech is now getting morphed to embedded credit, right? Powering a traditional player with an invisible lending product is the next innovation. And it's not only we are doing it, we are seeing many players at early stage businesses suggest exactly this and then work across the ecosystem, right? Because lending is an invisible product. You don't need to have a brand to lend. You need to give a great service, you need to have a great risk engine, you need to build consistency, and there are players who can provide the customer for you.
Sure, thanks Akshay. So just as we are up with the time, quick point from Srikanth from you, and then closing point from Ram on yeah.
No, very simple. I think anybody who's going for building startup should think about the social responsibility. You know, as Ram said, there is tremendous amount of responsibility you need to have. Second is, I think there is a difference between solving today's problems versus tomorrow's problem. There's a large, investor inclination towards solving today's problem. So I just want to warn you that don't try to solve tomorrow's problem. Otherwise, it's a longer journey for you. The other three words I will just use is Web 3.0. I completely agree. Southeast Asia is swamped with investments in Web 3.0, and there's huge action which is happening. Second is the sustainability piece, ESG piece, which is again becoming super relevant for all the organizations, and it's becoming hygiene, right? Basic hygiene. So it will be uniformly applicable everywhere. The third one is the explosion of data, which is there are several models which can be built with alternate data sources. And these three dimensions, probably you could combine all three of them, or you can have one, unicorn in each.
Sure. Ram, to you, same points. Any thought, because you have covered the entire.
Yeah, I'll take only 2 minutes to cover everything. Like, Reserve Bank of India has already created a fintech department in January. They're waiting for Data Security Act to be passed, which is going to happen in this monsoon session of the Parliament. After that, RBI is planning to have a PSD2 kind of standard specifications for every fintech to qualify and become a part of regulated entity. Mind it, digital lenders are only regulated as a NBFC. They're not regulated as a lender. So that part is missing, and RBI is going to be very, very harsh, and the 1,000 applications have been brought down and they have come again. So they are worried about it. We should be mindful of this. So regulatory, reg tech is an area which is going to have a moonshine kind of thing. So always believe in blue sky vision and see that what are the new things where we can make more money. Digital lending, if I am doing, I am investing, I'm not maintaining SLR and CRR. I'm not worried about that. Tomorrow, if you're regulated and have been asked that out of 100 rupee, 50 rupee, you keep somewhere else, perhaps it'll be a real challenge. And I'm not talking about the matured one, I'm talking about this people, and every second person is coming in the way of lending, and they will have some problem. And there's investors' money. As regards to the digital payments, payment is a journey which is available everywhere, and it is a last mile. So that is another area. So if you are using any payment and you are using a seamless system, you are likely to be regulated because you are touching customers' money, and you are likely to be regulated by RBI. These people are forgetting. With this, I would like to say all the best to you guys. Be mindful, be responsible, and see to it you do not have the last mile surprises from the regulators like SEBI and RBI. Right. Thank you.
Thank you, everyone. So it was wonderful discussion with all the eminent panelists who come with a very illustrious background. And we could not have spent a time, 45, 50 minutes better than getting so much of insights, hands-on experiences from all the eminent panelists. So thank you all, and thank you Banking Frontier team also for giving us this opportunity. Thank you.
Thank you, Mr. Sachin, for conducting such a wonderful panel discussion. That was indeed an insightful panel discussion. Now I'd like to request Manoj sir to kindly come and present the token of thanks to all our panelists and moderator. We'll start from this side, and firstly I'd like to request Manoj sir to please present the token of thanks to Mr. Sachin said. Thank you, Mr. Sachin, for conducting such a insightful panel discussion. Now I'd like to request sir to please present the token of thanks to Mr. Anil Pinapala, the CEO and founder, Vivify India Finance. Now we are presenting the token of thanks after Mr. Anil to Shivangi Bubna, the partner investments and investments Mumbai Angels. Thank you, ma'am. Thank you so very much. Now I'd like to request sir to present the token of thanks to Mr. Prateek Agrawal, the founder, Truths Advisor. Thank you, sir. Now we are presenting the token of thanks to Mr. Akshay Mehrotra, the co-founder and CEO, earlysalary.com. Please, everybody, give a round of applause as we present the token of thanks to all our panelists. It was really, we are really grateful to them that they have come here and became a part of this panel discussion and this event, of course. Now we are presenting token of thanks to Mr. Ram Rastogi, the Chairman, FinTech Association for Consumer Empowerment. Now we're presenting the token of thanks to Mr. Shrikant Patil, the CEO and Managing Director, Digitally. And last but not least, thanks to Mr. Aparajit Bhandarkar, the partner venture fund, Verinium Capital Advisors Private Limited. Thank you very, very much, sir. Once again, thanks a lot to all our speakers and panelists and our moderator for this wonderful panel discussions. And this is just the beginning. Let me tell you, we'll be having some more path-breaking presentations and panel discussions. And I would like to thank our presenter, Mr. Manoj Agrawal, the group editor, Banking Frontiers, for doing this honors. Thank you, everyone. Thank you so very much. Wow, I'm really loving this energy as we have so many leaders under this roof. You know, as they say, you know, I believe the energy is contagious thing, you know. Say, if we have the leaders' energy around, everybody will get the benefit of it. And I can already feel that. All right, everybody, moving on to the next thing. And now I'd like to invite on stage the Executive Director, IDBI Bank, for the presentation, Mr. Saurav Datta. Everybody, please welcome on stage the Executive Director, IDBI Bank, Mr. Saurav Datta. Over to you, sir.
Good morning, everybody. I'm very happy and honored to be here. So I'll start with where the panelists left, and like to point out that we are of the traditional nature. We are the banks, right? And fintech is always looked upon as something as a foreign entity to the banks. And after a lot of experimentation, which is currently also going around, right, with the banks engaging in fintechs. But again, the word of caution, as it was pointed out in the last technical discussion also, that there has to be some kind of a governance or regulation, right? Without which it will be impossible to control or manage this kind of explosion and the kind of data which is flowing around, right? So that is a point of regulators would come heavily on that, and you see that is happening, right? It's not that it is not being completely, regulators have been blind to it. They have been observing it, and it will come very heavily. As Indians, we like to be unregulated, right? So we like to do things our own way and say, like somebody mentioned, that who is RBI, right? Who's SEBI? So we like to do things on our own. So that's where the challenge is. Imagine, like, if you go to the airports, I mean, even the people and the diaspora that you see in the airports. I mean, in India, if you see people, there's no, for the security check, people, the queue is invisible to them. People just jump the queue, right? The same people, when they land in US or in Europe, so they are the first one to stand in the queue. So that is the difference. That's the mindset. That's the mentality that we have. So unfortunately, that is something that's character building or things that we need to imbibe in ourselves. That's very important. And that's where, from a banking industry, which is a heavily regulated one, to a fintech, which is completely kind of semi-regulated or unregulated to start with, right? So that's the difference. And that's where the new age fintechs have to combine with the regulations. They have to follow the regulations, and then that would be a symbiotic relations with the traditional banking sector, right? So to start with, I will just cover, this is something which is not new. It was covered in the budget of 2023 by our Honorable FM. So digital banking units is something which will be there for a very long time. So the writing is very clear on the wall. Digital is the way forward, right? And all areas, not only the BFSI, but all areas will be technology driven. So technology was an enabler, will be enabler, and going forward will be the backbone for all the technology related activities which is going to happen. Because of the sheer volume, it's very difficult to manage and get a view of what exactly is going on. So there you require technology, both for as an enabler as well as to regulate, right? So that's where the whole thing comes in. So so for the digital banking units, it's been I'll just reiterate what has been given in the circular which was published. So I'll just touch upon some of the key areas. So they are basically in line. They will be symbiotic with the physical units, and it will be providing self-service mode from tier 1 to tier 6 cities. Okay. So this was first announced in the budget, and to commemorate this, we'll have the first 75 DBUs in India, and it's not from one bank, but all banks together, right? So they will be coming up with the digital banking units. So we want to also be there, and it's basically for the scheduled commercial banks, which are allowed to open the DBUs. There's no separate permission or any other requirement for opening up the DBUs for the scheduled banks. Payment banks, local area banks, and RRBs are excluded from this DBU segment, right? The most interesting part is that DBU segment will be looked upon as a separate vertical now, right? Starting with, it will be looked upon as a separate vertical, and in the accounting piece of the bank, it will come under AS 17, which will be part of the, it will come as a separate section in the accounting piece itself, right? So that's really important. So what are the main areas of the objectives of the DBU? So it's basically from a customer awareness. This is of very importance. The customer awareness is the only thing, right? So without that, you see so many of the frauds, phishing, social engineering hacks happening. That's just because there's a lack of social awareness. This is very important. If you look at the payments industry, the UPI itself, it's one of the largest and the most successful payment channels as of now, the highest in the world, right? But again, there are frauds happening on that channel as well. Why? Because basically of the customer awareness, right? Now the second thing would be, from a DBU perspective, would be availability of the digital infrastructure, which is already there, and in a self-service mode. So just to promote the DBU in a more better way, so there will be a person sitting along in the digital self-service unit on a particular banking outlet. There will be a separate banking outlet itself for the digital banking unit, which will have separate entry and exit. So that's also been clearly spelled out, that there will be a separate entry-exit for the DBUs, for the banks, right? This is basically to increase the digital penetration of the banking and financial services. And of course, there will be adequate top management focus to promote the digital banking. Right, so all this stuff is already available. It's nothing new. I mean, whatever is there, it's already there, right? So the smart equipment such as the ATMs, the cash recyclers, the video KYC, all of these are part of the existing systems as of now. But they will be put separately in that DBU, and there will be a person who will be assisting the customers who will be coming into the DBUs. So that's the idea, to again create more awareness. This is just because of to create more awareness, and so that the banks have more focus to it. This will be treated as a separate entity in the accounting piece. So that's where they're forcing the top management to have more focus on this, because now it will be in the 2023 in your P&L, it will come up as a separate vertical. So again, the operations can be insourced and outsourced. So that's very interesting, right? So you can use your own resources, or you can outsource this also. That gives a big leverage for the banks, the traditional banks, to get into this domain very quickly. Should be, again, this is a generic description which needs to map from bank to bank. It's a classic government definition of a preferential scale 3 or a PSB equivalent grade officers. But again, if there's a equivalence, there will be there in the industry to map it against the various. Interesting thing that the DBU unit, the chief person who will be managing will be called a CEO. That's interesting, and that would empower or give him more, him or her, or give more leverage in operating the DBUs. So the products and services are more or less same. The liabilities, assets, and digital services, part of it, again, cash withdrawal, deposits through ATM, CRM, passbook printing, transfer of funds, kiosk with eKYC, VKYC for verification, all of that, digital onboarding of government schemes. All of these are already existing. So this will be part of the DBU, which will come up, and the person there would be there to assist if there is any problems. But most of this are visualized as a self-service, right? So they are self-service at the moment, but again, just to bring more focus, more awareness, and to be part of the main banking stream. So that is where the focus is. So again, this will be part of the digital strategy of the bank. That is one. Again, this will feature in the digital strategy of the bank. This will have a digital, I mentioned that before, with a separate entry and exit provisions. Just from a different brick and mortar setup that we have from the banks, it will also have a brick and mortar setup, but again, separate entry exit. So, and dedicated team, and with an organization structure to run the DBU. This is basically to increase the digital penetration, easy expansion. Again, no RBI permission needed to open the DBUs for the scheduled commercial banks and the regulated entities. Help in product innovation, and like I mentioned, it will be having a periodic review from a business, and risk from the board or the committee of the board from a management perspective. Right. So that's all I had from the digital banking unit. I'll be happy to take any questions. I guess I still have some time left there. All right, thank you.
Check. Any questions, anybody? Okay. So guess they'll be asking you the questions in the coffee break in person. Okay. Thank you very much, sir, for this presentation. And everybody, now moving on to the next panel discussion. Now, the next panel discussion is on the topic, the ever-evolving ecosystem of payments and the collaboration needed for the same. And it is powered by EaseBuzz. Everybody, as you already know, the payments constitute of largest part of the business of financial services, and it is the backbone. The backbone is constantly transforming and evolving itself. So this panel discussion will be all about this, and now it's time for me to invite on stage our moderator and the panelists. Firstly, I'd like to invite on stage our moderator for this panel discussion, the partner technology and digital consulting financial services, EY India, Mr. Nilesh Nekar. Everybody, please welcome Mr. Nilesh on stage. Welcome, sir. Now I'd like to invite our first panelist, the co-founder and chief business officer, PayGlocal, Ruby Jain. Welcome, ma'am. Everybody, I request all of you to please welcome all our panelists and moderator with a round of applause. Yeah, thank you very, very much. All right, now I'd like to invite on stage our next speaker panelist, Chief Risk Officer, Bajaj Markets, Mr. Aditya Bhuyan. Welcome, sir. Now let's welcome the CEO, Digital Lending, RuPay FinTech, Sharad Agrawal. Now I'd like to invite on stage the Group Head Business EaseBuzz, Rohit Katyal. And last but not the least, CRO FIA Global, Sudeep Banerjee. So now it's time for us to begin our second panel discussion, and I'd now like to give it over to Nilesh, sir, to take it forward. Over to you, sir.
Is this on? Yeah. Thank you and good morning, everyone. Really excited to be here with my fellow panelists, and thank you for taking time out. The topic is really around the ever-evolving ecosystem on payments and the collaboration it takes to really make a difference to customers. I think traditionally we've always been thinking of customers such as ours who really use various forms of payment. But in the past many years, I think there's been a huge focus on merchants as well, right? Because they play a very, very critical role in that entire ecosystem. So today what we are really going to do is touch various aspects of payments with lending, payments with individuals like us, payments with merchants, payments with what happens locally, what happens globally. So that's really what we're going to be discussing about, right? And I'll start with Ruby. Ruby, I think with PayGlocal and with HDFC for so long. What do you think are some of the emerging needs that you're seeing both from individuals as well as businesses, especially when we look at payments, and not only payments but the overall ecosystem that they exist in?
So I would, okay, I'll break my response to two. First, for the consumers, because that's where finally every business is also trying to address something for the consumer, and they need sales to happen. The consumers are looking for what the previous panel was also saying, easy and safe experience. They don't want hassle, they don't want, one of my fellow panelists was saying, why do we carry so many cards, why don't we have a single plastic? Right? Finally, everybody is looking for what is easy, what is simple to carry, what is easy to understand, easy to execute, and absolutely safe to carry around. That's where, you know, you're seeing so many payment methods. I also heard, and you will also hear in our panel, how lending is becoming more and more seamless, how one click and just digital is the way to go. That's pretty much where the consumer trend is, and that is not new. COVID just enhanced and accelerated what was already happening in our country. About businesses, what is coming across is the fact that many businesses are trying to solve the gaps in a process flow. So there are not just businesses, the businesses are focusing on value adding a very traditional process. So whether it was KYC, in the previous panel I saw it fee, right? You look at what people are doing, picking up a flow of information movement or paper movement and trying to digitize it. The core theme being simplification again. The core theme being opening up of segments which were not there. You yourself said that merchant is becoming a big focus area. Look at what's happened in India. Look at the evolution of just the sheer number of merchants in our country. Before Paytm, PhonePe, Amazon Pay, we would talk a few lakhs. Now we're talking millions. And that is also business growth, because these merchants are indeed business people. So we're seeing a lot of business evolution thanks to payments. Payments first, seamlessness and risk protection. Pay local. One of the things that we're also doing is solving cross-border, and not just pay local. A lot of us here are trying to also understand, with COVID, the global borders have really reduced. How do you leverage this one big world as an opportunity? A lot of players are now trying to solve even global payments, global commerce, global trade, setting up offices abroad. Is that advantageous, not advantageous? There are consultancies happening around it. So as I read, as I talk to people, I'm seeing many facets blooming, and all adding towards what more value can we give to the consumer. That's where the business evolution is. Thank you.
Thanks, Ruby. And some examples, right? We, working back with fintechs in the region. A lot of fintechs are trying to solve very specific issues, and I'll take one example. There are quite a few laborers from India who go and work in the Middle East, right? So there are fintechs who focus on the needs that they have are very different to, say, somebody who's an IT engineer and working in a software company, right? Or an exporter who's maybe dealing in jewelry exports, right? Similarly, we saw a lot of Bangladesh immigrants also working in the region. They have very different needs of when they want to remit money back to their country because of regulations, etc., to local countries. And some very innovative solutions around how do you really solve for those kind of needs, not only for remitting money across borders, but also when they get the money, how do they use it locally for shopping, for some of their medical needs. And when we talk about the ecosystem as such, right, it touches so many various aspects of their lives as such.
Correct.
Extending that, and Aditya, I think you work with Jakarta, now with Bajaj. We are seeing an explosion of the way data is being used, right? And we've seen census data being used. We are seeing geographical data being used to really look at attractiveness index of villages, towns across the country. Right, and coupled with that is really the whole overlay of the data protection. How do you really use it? The whole thing around account aggregator as well, right? So what are you seeing? Being with Bajaj Markets, working with so many different OEMs, how do you really look at that space?
Data, then that's a very interesting point you brought up. There is data available out there, and profusion of data. It's about how well you can dice the data and have a meaningful target segment after which you can go. and also make sure that when the customer comes in, like there's two aspects to using data from a fintech perspective. One is you create target segments, you go after those target segments. Second, somebody might come in on their own and you have information about them. How do you create a seamless journey? And I'll build on what Ruby said about the customer needing a simplicity in every experience that they have, every interaction that they have with financial institutions. So it's all about making sure you have a customized offering for the customer based on the data you have, based on which profile he belongs to, which geography he belongs to. And then when the customer comes in, you're doing a campaign to the customer, you're inviting him to your platform, you ensure that to the largest extent possible, you are able to have a fine-tuning and a honing of your risk management and your company's tolerance and appetite, so that you're able to honor that offer that you've given to the customer and you're able to give him the most seamless experience. So it's a data used for selection, for pre-fill, as well as a layer of APIs where you can do all the digital verifications that you possibly need to authenticate that he indeed is the customer that you're bringing on board, and then giving him a true delight experience in terms of a loan or a card within a few minutes of his application journey, getting over there and then itself, and not kind of delaying it for 14 days. Like traditionally when I joined a long couple of decades back, you used to have 4 weeks to 6 weeks for a loan or a credit card to actually come to your post box, and you never knew what the result is going to be. If you got rejected, then you never knew that you're getting rejected. Today the journey gets over in minutes.
Right. Thanks. Thanks, Aditya. I think the whole aspect of customer ease that Ruby, Aditya all spoke about. Sharad, if we were to really move on to being in lending, right, and coupled with the entire payments business, and they typically say lending is a collections business, right? If you lend, everybody would really want to take the money, but how do you really collect and run a profitable business as such? So how do you really see, how do you leverage things around what is being done on the payment side, coupled that with lending? We discussed a bit about POS. How do you really look at that data to really even look at credit worthiness of a merchant? Any thoughts on that, and how is that space evolving?
Thank you. So I come from Rappi Pay. So we are into entire cash in, cash out business, POS, digital lending, and now neobank, right? So like you mentioned, so we almost process 1 million transactions on a daily basis. There's 150 crore business on a daily basis, 6,000 crore on a monthly, and there are huge data coming up. Whether it's a payment, DMT, Remitex, and your POS transactions, okay. So there is a huge data lake house which we have created, and basis experience of customers, whether transaction usage, somebody is earning commissions like direct business outlets, we work with those guys. Their POS transaction data, what's happening on that, right? Banking data. So there are lending products which we have come up, okay? And this is a market need, okay? Including vintage, right? How long they have been working with us, right? More than a year, 6 months, okay? And behavioral also, okay? Are they doing transaction on a daily basis or once in a 15 days or once in a month? Okay, so those kind of data is very useful for underwriting. Okay, yeah, there are traditional ways of bureau, all that, right? But I think we have to go beyond that post-COVID scenario. So we have come up, 4 or 5 products, and like you mentioned, how do we do collection? So there is a virtual account we maintain. There's a lean mark is being done on those outlets of those customers, and there's a daily collection mechanism has been put in place. Where there, and the moment customer skips a payment, let's say second day, there is an auto pop-up happens on a CRM. Okay, there's a message goes, there's a call happens for their payment collections, and most importantly, we do see why he's not doing business with us for those 3-4 days. What help we can do to increase their business, to increase their commission, and eventually taking our collection. Those are the things we have put in place. There's a complete, ecosystem of payments, lending, neobank, POS, coupled with complete CRM solutions, data analytics piece, data science piece, and of course, the best of the customer services. And of course, we have a feet on street also. For collection mechanism, there are almost 2,000 folks. They are in and out with those customers, the relationship-based business. If anything goes wrong, they are there. Okay. So we'll not wait for more than 2 days, 3 days for our collection. It is on a daily basis. That's what we have put in place.
Interesting, Sharad, and we'll come back to that question. I'll hold my question, but maybe to Rohit, you sit right in the midst of the value chain, right? Both in terms of collections as well as payments. And this is oft repeated thing that we keep seeing in the media as well. We keep discussing in circles as well. Is the card, the plastic as a form factor going away?
So it's difficult to say that we'll get away from the cards with many innovations coming on. I mean, before that, I would like to tell that payments has been the backbone. Right? The industry is moving from traditional to the digital side. Post-COVID, most of the businesses has realized that what's the importance of the digital payments is more important in terms of convenience to the customer or the business processes. On the other side, we also see early stage digital companies which were internet first are moving digital now. So everything is moving, converging in the middle. So digital to phygital, traditional to phygital coming on. And talking about cards have always been the digital. Since inception, it has been. I mean, that was the forerunners or the digitization of payments, which later on getting into a journey of more virtual in nature, right? I foresee this as that with NFC or tap and pay innovations which are there, the cards are still to be, it's not easy to get away from them on those lines. And naturally, the more use cases will be coming in. I was reading one, there was a report which talks about by 2025-26, debit card issuance will be around 121 million. And on the other side, 145 million is the expectations from the credit card issuance even. So the numbers itself talks about the same.
Yeah, I agree. And I think we usually, as humans, deal in black and white, but it's always usually gray. It's never either this or either that. It's going to always be a combination, right? And I think that's true in this debate as well, whether the card as a form factor is really going away. And when we really look at tier 2, tier 3 cities, and so this question is for you, you working with FI Global, then you're looking at impact lending. I think the entire government schemes, right, and the way they've changed sending money out to the last mile has really dramatically changed the way this was looked at. What are you seeing as the impact beyond just this normal mundane thing of crediting somebody's account, they having a zero balance account? What are the things that are evolving around that basic seed that was sowed early on?
Actually, the evolution, if we look at this impact space, and now the word financial inclusion is also quite popular. So inclusive financial growth and that we speak about. And there has been a rapid evolution if we can look at it. So probably there was a point of time when the banks, they were focused on opening bank accounts, a basic bank account with zero balance. And then the focus came with PMJDY, Pradhan Mantri Jan Dhan Yojana. And the struggle was not only to open a bank account, but make the banking profitable at the last mile. So it started with the funding in the accounts. So a lot of awareness and financial literacy, that has really played a critical role out there. And thanks to the assisted banking models right now across the country, be it through our banking correspondents, Bank Mitra, or kind of, these assisted banking models at least created the basics for these digital payment to take off. So at least there is a bank account, there are funds in the account, and then the digital payment, the utility bill payments and all that kind of basic habits, the basic practices bringing in place. And it's actually a journey with these customers, with the bottom of the pyramid customers, low income customers, to take them up digitally. So somewhere it is also the income digitization. For example, if we look at the very bottom of the pyramid, the 100 days workers in a rural scenario, if his weekly wages are coming directly in his bank account, he goes up to a bank mitra or a point for the transaction. Earlier it was 100% withdrawal. He withdraws cash, and cash being the king, make all the payments. Now there are more digital payments, electricity bill and all that, through an assisted model. And it's a journey where they have taken up. And we have seen in some of the rural areas where some of the banks have taken adopted villages as digital villages, where the young generation, mostly the high school and the college guys, they are having, there's a good penetration of the smartphones, and they are using it for the e-commerce purposes. Okay, and the POS machines, I mean the use of debit cards, the rupee cards out there has made a change. And there are, so now the journey is from an assisted model to a self-reliant model, where the customer himself is using the applications, the payment applications, doing it. However, it's a long journey because it's a low literacy, low awareness environment. From a risk perspective, there are a lot of areas that we need to do further, but India is moving. I mean, there's a remarkable work. Yes.
Thanks. I think the common thread, really, what we, at least I observed, is that there is a digital journey which caters to simplification, ease of use, and then obviously there's a phygital journey, right? There's an assisted model as well. We spoke about collection with feet on street. We spoke about phygital, I mean, in the rural areas. How are you seeing that, Dhruvi, in your business when you really look at Pay Local? Are you really seeing this really something which is prevalent, or it's purely just looking at a digital journey only?
I'll build on this, and I'll step back a little. Starting from, like you know, I've worked over 19 years with HDFC Bank, and there was this constant debate happening to say, as a bank, of course we want to get digital. The presentation just before this with IDBI, there's a large effort happening to get digital. That's on one side, the need, or what we perceive as the need. On the other side is India, right? And when we go to places like Jaipur, Surat, Indore, the consumers have been made aware, like the business correspondents and all are making consumers aware of how to get digital. So there is on the one side, there is institutions, the traditional institutions, trying to go phygital and then digital. And on the other side, we're also getting consumers to understand digital better. UPI has been a disruption of sorts, but not everything is expected, even by consumers, off the platter digitally. So phygital is pretty much where we are seeing, like all of us are pretty much saying, that's where we see convergence. Not too different when we come to Pay Local. In Pay Local, we're trying to solve for Indian merchants to be able to sell abroad, and international merchants who want to come to India to be able to collect payments in India. So while the end leg of payment is 110% digital, there is no interaction needed between the cardholder and the merchant. But onboarding of the merchant, unless you go see, feel, touch the merchant, you cannot underwrite a business. So a business by itself, even in Pay Local, we're very clear that the merchant underwriting will stay phygital for quite some time to come, because not every time can we rely upon the documents that the merchant has given. But the consumer, the end experience of the consumer should be 100% digital and should be so seamless that the consumer should not feel that he or she is paying to a merchant in India while she's in the US. So that's the demarcation we are trying to draw. And I'll build on one more question that you asked, right, on data. The consumers are getting extremely aware of where they are giving their mobile numbers. And they're getting very finicky on where you're using the data. So while there's so many of us building business models, the regulations on data privacy and GDPR is going to ensure that between both the consumer and the businesses, there is a little more prudent exchange of data that happens. It's definitely an area which we will, all of us, experience a huge change in the coming 18 months. That's also what I wanted to just say.
Sure, thanks. Thanks, Ruby, on that. And Aditya, the question really is, and I mean, this whole thing around OCIN, the account aggregator framework as such, and since you manage risk, right, for Bajaj Markets, it's a combination of a risk and a business question, right? Because business is always pushed to see how do you get more insights into prospects, convert them into customers, retain them, right, over a period of time. How do you balance this? How do you really manage this, right? Because being in financial services, entities are regulated, they are answerable to various regulators, right? So how do you really maintain a balance? How do you really manage this?
From a data management perspective, and I'll just lift from where Ruby left, because like while in the US and Western countries, data is very strongly and strictly regulated. Even today, my experience is that you have data which is floating around everywhere in the country. You, like, you know, I can give an anecdote here. You pay 8,000 rupees, you get 63 crores of data. So, and that's a true life example. And the data is quite rich. It's not as if the data is bad or it's like, you know, you can't use it. Those customers exist. They don't know the data is floating around everywhere. The regulation is not present at this point of time in terms of protecting that data. Banks and other financial institutions to some extent have a third-party consent that they take from the customer, but it's all buried in the fine print. And once, like, you know, if, for example, I, as a personal experience, I'm calling somebody for a, like, you know, for a cleaning of my water purifier, I immediately get 3 more calls from 3 other non-related entities who also want to clean my water purifier. And I'm generally wondering, I gave a call to one person, how did the other 3 people know? Like, you know, we keep talking about real-time loan decisioning, we keep talking about real-time credit card application processing. This is like real-time data which is going out. It's not as if you have to buy the data, right? So there is that sensitivity for sure. And as entities, especially as fintechs, we need to be careful about how we use that data. And from a, like, I can talk from a Bajaj Markets perspective, we do have that arm's length distance between the group companies as well as with the banks that we work with. So we need to ensure at any point of time, if we have an agreement which says we need to purge the data after we process the customer and we hand the customer over as an approval to the bank or the insurance partner that we are working with, then that has to happen. Those pieces have to work like clockwork because we are accountable to the entity and they are accountable to the final customer to ensure that the data is not floating around somewhere in the white space and then it gets sold to someone else. And but having said that, the data that we do get, that has a very strong power. What we are also talking about is not just static data, because we keep talking about prospects. I think somebody touched about prospects and how we could use that data. Nowadays, there is so much of real-time data which is available in the flow itself. When a customer comes to your application journey and they're going through a digital journey, from the mobile device that they are using through a SDK usage, which you take a consent when they are downloading your application on their iOS or Android platform, you can actually capture all the mobile data, the browsing history, behavior. You can use that data in real time along with the data you're getting from Bureau. There are firms out there which actually generate scores based on the SDK data. I can talk about Credo Labs, which we work with, where the score is actually as powerful. We found it to be very surprising. The score is as powerful as a Bureau score. So in terms of differentiating on bad rates, so you can use those advances also. You don't need to take static data. In a real-time journey also, you can actually process a customer and you can give them the product that he wants, he or she wants, and that's about it.
Yeah, interesting. You know, I mean, to really expand the credit base, we will have to look beyond bureau data. Really, to look at alternate sources of data to see how do you really arrive at a credit worthiness of individuals or of merchants, Do you use that in RappiPay? Some examples which are maybe not confidential, but how do you really use that to effectively see credit worthiness of merchants, of individuals?
Like for our, Kiko business, we keep saying there are geographical data, right? And how are they doing transactions, their transactions behavior, okay? Their, bureau history, okay? Are they defaulting? What are their, secured loans, unsecured loans? We keep seeing that data, right? And of course, on what social platform they are getting into, right? So we keep seeing that data, okay? Whether is active, no active, if somebody else is using his phone, that also we see, right? Whether he is really using data or somebody else, because in payment business, you will find a lot of, people using multiple accounts, right? And multiple PANs they would have, okay? So there is a algo which we have put in place. There is a single MID, multiple MIDs for POS transactions, right? And which, account to be blocked for, need mark, all that is a continuous process. On a daily basis, there is an auto API based process, okay? And there is an auto checks. If he is maintaining 4 accounts, will pull out wherever the balance is there, right? And all that, consent we upfront take from customers. So it's a part and parcel of our program. And there's a huge data lake house which we have created. Okay, so we keep pulling all data of whether banking, remittance, or whatever business we do. And basis that we are coming up with a lot of new products. Okay, and there are, some interesting story also. So I am just saying, we could not figure out, there was a loan which we did 10,000 rupees loan. A guy is sitting in a greater class, okay, and he's defaulting. And we could not find a reason, right, why he's defaulting, right? Later on, we figured out his mother is on bed, right? And he's traveling, nobody's having clue, right? Who took a loan, right? So that kind of, interesting data we keep seeing. At the same time, there are some bad customers, but they are paying regularly to us. Okay. Bureau history talks differently, but their intention is to pay. Yeah, so there are story.
Just adding to his example, today social media data can tell the situation of the person itself. We can use so many alternate sources to underwrite and find out not only it's the banking statements, but going a lot beyond towards the alternate data. It's even the travel history of a person talks today about his lifestyle or his expense management aspects towards taking any lending calls. So you would have taken the social media, you would known what actually is happening at home.
Right. And Rohit, for you, I mean, again, the question is, since we're talking of data and simplification as well, do you really think language is really a barrier? Beyond maybe just English and a couple of other, when you look at, and I'm just not talking about tier 1, tier 2 cities, but when you just look at the expanse across India, right, and the languages that are prevalent by state, within state as well, right, and that question is to you and then to Sudip as well. Do you really think that's a barrier that is waiting to be broken through innovation in this space?
Yeah. There has been a challenge around the vernacular piece. I mean, since we fundamentally, are a large economy, demographically different across states. And latest I have seen with the EPOS coming into picture. I mean, let me talk about at EaseBus, even we are on a roadmap where our product, EPOS product, which will work on a mobile device, for the retailers or for the offline merchant, where we want them to get digitized, and will have an capability of vernacular or the state languages, something similar to a soundbox model. That sort of a payment has been made. So these, you see, the roadmap is definitely there, and the challenge is getting addressed over a period on those lines. But ultimately, somewhere it's all about the UX or ease of any particular platform, which binds horizontally, not vertically, across the country. I mean, that's where you can see the success of WhatsApp coming in place, how the disruption of WhatsApp happened over a period. So these are certain examples, and tomorrow such challenges can be really addressed over a period.
Sudhir?
I think regarding this issue of language, I remember a a nice case, kind of a case history kind of, because we were doing a project for USAID on the most financially backward districts in India, mostly spread around Orissa, Chhattisgarh, Bihar, Madhya Pradesh, around 54 of the districts. And there was a team from Guatemala who came down because they have similar issues out there with language and diversities in culture. Now, how we had solved our issue is that through a community participatory model, where one from the community who speaks in the same language, who has same kind of ethos, same kind of, who can connect with people, when they spread the financial literacy, when they speak about the importance of a basic bank account, about making the payments digitally, the advantage of handling cash or going through an, I'll say, unofficial method. You were speaking about immigrants like Nepalis, Bangladeshis and all. Nepalis, we found that around 85% of the Nepalis who work in India, they sent money back probably through unofficial methods and sources. While there are nationalized banks like State Bank of India and Punjab National Bank, they have some solutions. What we did is that we found agents within the Nepalese community with an application who would help a Nepalese person to transfer the money. We had a tie-up with Prabhu Bank in Nepal, some other banks, IME and all, and it was reaching out to them in the Nepal. So our one of our objective was financial inclusion in Nepal as well. So that's how we started on. So this community participatory model that actually breaks the barrier of your language and culture and you move around because you involve them, the community, in your journey. Okay. Similarly, as you referred about the data speaks a lot, and it helps you understand the communities, their culture and practices are better, and make your products and services more intuitive. Understanding a low-income customer, his challenges, his way, because he also earns money, he wants to save money in the most safe and secured way, and he wants the best of the services, as we all do. Just a small case history kind of, probably I keep it sharing at different occasions, it's a little emotional kind of. So during this lockdowns and all, the domestic remittance, the money transfers, so from a risk point of view, we were tracking it. So if there are one individual getting money from different sources, we're just tracking. It can be a cheat fund, it can be something else and all. So some of those revealed that that some daily wage earners in the Ghaziabad slums, earlier they used to get the wage on Friday kind of, or Saturday, weekend kind of. There was an impulsive spending next 2 days, non-veg food and all that. And then they used to starve for next 2-3 days. And they used to wait for the last day when the money would come in. Now, during this period, there were a lot of challenges. So they were doing digital transfer to some of the grocery shops, and it was like a small amount on Sunday, small amount on Monday, small amount on Wednesday, and having a regular kind of meal almost every day, not a very impulsive spends on the first 2 days, but a more regular nutrition over 6 or 7 days. So you were telling about some of the impacts. I mean, it's going beyond. We see just digital payments, such digital payments, but to what extent it can impact the life of some of our consumers, it's really amazing. Yeah, it's an issue.
Sure. Thanks. Thanks, Sudhir. And we've had a very good run in the last 4 or 5 years when you look at funding, when you look at valuations of fintechs. The question really is, right, on one side, there's a huge pressure on revenue streams and on income, right, with what's happening on the innovation side with UPI, etc., MDR charges being pushed down. Huge overlay of regulation, because that has its own cost to really comply to those regulations. So how do you balance the business model, right? Because eventually the business has to earn cash and has to be profitable to survive in the long run, right? I mean, flash in the pan, 2, 3 years, 5 years is okay. So this question is for, I'm happy for, without divulging business plans, but how do you balance these two?
You want me to answer this?
Yeah, please go ahead. It's for everyone, in fact. So.
Yeah. And naturally, this is a very natural question. For any business, it comes first. See, definitely over a period, the business models are evolving. I'll keep continuing in the same stage. But by now, fintechs and everybody is now realizing that unit economics is very important for the sustainability or a long-term business approach when I talk about. If you talk about, we at my current organization, EaseBus, I mean, we always have believed in creating value over the payment layer. When I talk about value features, it means value-added services which we have created over the payment layer, over the payment gateway, which really helps us to balance the monetization or the stickiness of the customer. For us, today sustainability is, there is lesser churn, more stickiness of the customer, more usage of the transactions happening in the business model, right? And balanced commercial approach behind it. Let's talk about CFO as a service, where at EaseBus we have been providing. It's nothing, it's a complete one-stop shop for all your financial management processes which are driven with the money movement or the payment layer at the bottom are powered by us. Be it your automated payouts or collecting money or expense management or your typically vendor payments, you talk about utility payments, you talk about payroll management. When we are with the new ecosystem approach, we are now bundling it as a value prop. Right? And this is where especially the mid or the small segment, which small businesses I'm talking about here, have those native requirements. And they also want to digitize themselves. I mean, naturally, last 3 years, unfortunately, have not been that good in terms of health for everybody, but have taught us a lot that it's a requirement today on those lines. And we have been evolving the business models accordingly to it.
Thanks. Any other thoughts, Sharad, Ruby?
You know, in our case, whatever we believe that it has to be on scale. Okay. You, as a fintech, you know, if you do in a payment business or a small business, will never be profitable. Okay, including neobank, all that, right? So we did a lot of deliberation, you know, a lot of study we did internally, and that's why we came up with, you know, 4 or 5 products, and we are thinking of scale, right? Whatever do volumes of transactions, and of course should complement, you know, each other business lines. There should be cross-sell opportunities, right? In our case, like, it's a zero distribution cost for our loans. Okay, so we rely on all Kiko data, neo-banking data, and we are extending loans. So we are giving good service, good rates. At the same time, lending gives us good margin also. Okay, so you have to figure out what are multiple products, what complement you can each other, cross-selling opportunities, and which is the highest margin business. Okay, accordingly you have to create an impact and put in a scale in the market. Otherwise, standalone business, small business will never be profitable, especially in fintech. The kind of expenses you have to do on cost side, team side, IT folks, they're charging 4 times, you know, within 2 years, 3 years. It's very difficult to hire those guys, right? And you know, regulations, right? A lot of regulations coming, a lot of new technology upgrades you guys need to do. Within 12 months, you have to change technology, right? Where will you get those funds? And you know, funds, what's happening with those existing players? I will not take names, right? But you know, it's a very challenging market. So fintech can do only when they have a scale and multiple bouquet of products, multiple business lines, and cross-selling opportunity.
Thanks. Thanks, sir. Ruby, anything else?
I'll just build on just one thing. India as a country, right? The first time when barter system started in India, I think we were prudent back then also. There was buy and sale. There was never, and the buyer and the seller were very clear on the value each is giving. Somewhere down the line, right, maybe because of some of the, initially when you're trying to create a need, there's this urge to say, sab kuch zero de do. And there's this presumption that the consumer will not pay. Whether we like it or not, the hard truth about business is that there should always be an earning made. And if you're not making an earning at the smaller scale, like Sharad was saying, you please evaluate. If you can't make it run in 3 years, you should shut that business. Mr. Puri taught us this very well in HDFC Bank. Any business is not making money. If the business is not giving you a trend line which looks profitable in 90 days, get out of that business. So it's important to have such fundamentals. Otherwise, you will end up ruining or imbalancing a model. Funding is here to not stay forever. Finally, everybody is looking at return to money.
True.
So yeah, so absolutely, business not profitable, not okay.
Thanks. I think our time's up. Thank you so much for that engaging conversation. Any questions that you may have for any of our panel members, please do go ahead. Otherwise, we can wrap up the session.
Any questions? Okay, so I think this is the wrap. So yes, this is the wrap of another wonderful and insightful panel discussion. Thank you, sir. Thank you, panelists, for this one. And now, moving on, I'd like to request Manoj sir to kindly come on stage and present the token of thanks to all our panelists and our moderator. I request Manoj sir to please present the token of thanks, firstly to our moderator, Mr. Nilesh. Then to Ms. Ruby Jain. Mr. Aditya Bhuyan. Thank you, sir. Thank you very much. Mr. Sharad Agrawal. Mr. Rohit Katyal. Mr. Sudeep Banerjee. Thank you all our panelists, speakers and a moderator, and thank you Manoj sir for doing the honors. And everybody, I would like to tell you something very, very important. Please drop by the Service Now booth for an interactive discussion with the InstaV and ServiceNow team. So everybody, now we'll be taking a quick 10-minute short coffee break. I request all of you to kindly be back on time. And once again, I'd like to tell you about our exhibitors. Do visit those stalls. Our exhibitors are Stringer Software, Scale Up by Bajaj Finserv Direct Limited, ID Central, Trejhara Solutions, Interact Suite, Sunfire Technologies, VMware, EaseBuzz, Manage Engine, Tashi Linux Services, Sophos, ServiceNow and InstaV, ID5, Datamato. And everybody do visit the Sunfire and VMware Solutions booth to get your legacy apps materialized, and also do collect your personalized coffee mug from there. So I request once again all of you kindly be back in 10 minutes. It's a very quick coffee break. We have some more presentations and the panel discussions coming up. Thank you. Enjoy the coffee break. Please turn on the stage lights console. Check, check. Ladies and gentlemen, I request all of you to kindly be back at your seats. We are starting our event. I hope I'm loud enough. I request everybody who's outside having the tea and the coffee, please be back inside the hall. We are resuming our event. Thank you so much. Everybody, I hope welcome back, everybody. I hope you all have enjoyed your coffee break and you're more energized to attend our upcoming presentations and the panel discussions. So now the next up we have is a presentation, and this presentation is about delivering experience as a service in financial services. And for this presentation, I'd like to invite on stage the Senior Principal Business Consultant, Genesis, Mr. Satish Annamalai. Everybody, please welcome on stage Mr. Satish Annamalai for the next presentation. Can I have a round of applause, please? Thank you. Over to you, Mr. Satish.
Hello everyone. Hope you're having a good time in this physical event. I think everybody talked about digital, phygital, right? I believe nothing replaces a physical event like this. We all had the Zoom fatigue, right? Virtual hang-ups, everything is done. Hope everybody's having a good time. And let me talk about myself. I'm Satish Annamalai. I'm a Senior Principal Business Consultant for Genesis. And today my topic is delivering experience as a service in financial services. Just a little bit about Genesis. We are a global leader in cloud customer experience. We have over 7,000 customers, and we handle over 70 billion interactions every year on our platform. Most of the Fortune 100 companies are our customers, and we have over 5,800 employees in India, including over 600 in India. Being a customer experience company, we periodically do surveys of the market to see how customer experience is evolving and what customers perceive from a brand. The last 2 years, we know lots of things have changed, right? Along with it, what consumers expect from a brand has also evolved and changed a lot. One of the things, of course, all of us know that the interactions have completely moved on to digital. Physical still stays, but digital has kind of overtaken physical interactions across many, many different domains. Some of the key results from the survey, this was touched upon in an earlier panel, right? Data collection and how you use it. Majority of the consumers, we feel, that are okay with customers collecting data as long as they use it to deliver a better service, right? As long as they're not using it to sell that information to another third party without their consent. That's sorry about that. Sure. Yeah. Sorry about that. Can you hear me better now? Thank you. Unfortunately, I have a bit of sore throat, so I'll try. The other part of the survey is that majority of consumers really prefer an empathetic customer service, right? They don't want somebody to answer them immediately or right on the spot. They'd rather wait, but actually get the right level of service. The person who they are speaking to really understand what they're talking about and then actually tries to help them resolve their issue, right? So that was a bit surprising because as Indians, we all want things to be done quicker, right? Don't want to wait. But in reality, we can rather wait and get a better service rather than going to a person who's going to take a really long time or not going to help us at all. And the third point, of course, all of us know and deal with it every day, right? 1 in 3 customers still say that customer service is a big hassle, right? We've all been on the side both as consumers as well as maybe implementers of these things. Now, while the world has changed, how are organizations dealing with in their customer experience, right? Many organizations still prioritize efficiency and effectiveness, right? We know it's important. We know it's good to make your resources more productive and get what you want out of them. But in this new world, that's not enough. The third pillar, which we believe is very critical, is empathy. And empathy is not just about putting yourself in another person's shoes. It's all about building that connection and using that to deliver a really personalized experience. We have a simple framework to think about it, and this works if you think about our daily relations with our friends, families, and colleagues, right? First, we need to listen to what that other person is saying, right? We can't jump in and say what we want or not even respond to them. We listen. We understand what they're trying to say, what they really want. And based on that interaction, as well as the many interactions we've had with them over a period of time, we can kind of predict what would be the right response at that time. Do they want just somebody to listen to them? Do they want us to do something for them? Do they want us to tell somebody else what is it, right? Act on it, right? And then we see how that interaction goes and we use that to refine it and become better, right? Become better as a human being, right? Now, we believe in empathy so much that Genesys has created a new category called Experience as a Service, and it's all about delivering empathetic, personalized experiences at scale. It is not about doing a good thing for, let's say, a premium customer. How do we really do it and scale it across your complete customer base, right? So to do that, we've taken a 3-pronged approach. First, of course, being a technology company, we need to build the tools and systems which can help deliver on that promise. And this has 2 components, right? One is the consumers who are going to contact us and the employees who are going to handle them or the resources who are going to handle them in case of automation, right? So we give them a choice of channels so that consumers can interact on the channel they want in the moment they want and in the manner they want. And building upon all these channels is our artificial intelligence and machine learning layer, which listens to how interactions are happening both in that moment as well as all the interactions which happened earlier. And we use that to segment and cluster customers, right? And we can kind of decide what kind of outcome would be right for them and how do we drive the next best action which is most suitable for that customer at that point of time. And it's all powered by various AI-infused technology. One of them is bots. Some of them could be about routing to the right agent. And if it goes to the agent, can we help the agent in real time to really address that query in the right way, right? And we use voice of the customer and business outcomes to see how that interaction goes. And we are aware that Genesys is only one part of the CX infrastructure, and there are lots of other technology components which are at play. It could be your Microsoft systems, it could be your AWS, Google, Adobe, whatever else systems are there in your technology infrastructure. We've made our platform open so that they can seamlessly exchange data and be able to do it in a really seamless way, right? So this enables us to extract relevant information from these systems as well as write them back to these underlying infrastructure. And that's really key to drive empathy in action. Now, to really build this, we knew that a premise-based solution just would not do it. It has to be based on a cloud-based platform. So we built a completely new platform built from the scratch on the cloud, in the cloud, and it features the most modern systems architecture. It has over 400 different microservices running, which allows us to really innovate how quickly we can deliver our services, right? It's a fully DevOps-based automated environment, which means we're able to push more than 20,000 code changes every year, allowing for the delivery of many new features every week. With so many new features being pushed out, we need to really make it easy for customers to consume this information, right? We can't, so this essentially means that there is no downtime, unlike a premise-based solution, because it's a completely cloud-native solution. These new services and capabilities can be automatically consumed without disrupting your existing setup. So it really delivers on faster time to value. And the core platform as a cloud is great, but what really helps is how do we use artificial intelligence and machine learning to really drive and personalize those digital experiences. So here we have a whole bunch of solutions. One of them is called predictive engagement, which essentially understands how customers are navigating your website, what they're doing in real time, what kind of segment do they map into. And not only that, we have seen how customers interact and navigate over a period of time, right? How do typically customers behave? Which types of customers need an assistance or an engagement, and which ones we don't need? They know what they're doing, let them proceed, right? So how do we intelligently help them at the right moment if they need it? That's what our AI model helps them to do. The second one, of course, is bots. Now, we've all been in IVR hell, right? You get onto a call and then it goes on and on. You never are able to get to a human. The industry seems to have replaced IVR with a bot, which does the same thing. It doesn't understand us. It keeps putting us on a loop, and we never get anywhere, right? And finally, it says, why don't you call, right? So that's not what we're talking about. We've really made it empathetic. And to do that, we not only have our own AI-driven bots, but we're also working with the leading cloud platforms such as Google and AWS and Microsoft, so that we can leverage all their natural language capabilities, including all the Indian languages which are in most common use. So bots which can really understand us in our own language and guide us in the right way. The third one is about, today most of us communicate with brands in various different forms. It used to be just a store or a bank branch, right? And then it became a phone, website, app, social media. But as channels have grown, the experience kind of becomes scattered and you don't really get a consistent feel of a brand. So in a way, how do you make this engagement omnichannel and seamless using AI, which is what this third part is about. And now what we're talking is not some niche solution which is really for the largest banks and the largest enterprises in the world. It is a solution which fits enterprises of all sizes, and it is a global solution. And we have this cloud platform in 12 different regions around the world, including one right here in India, in Mumbai, which we launched last year. And the advantage with that, of course, is it is fully cloud-based, and all the data is stored within the country. It does not get out of the country. All the transactions, all the interactions, all the customer data stores is within the country. So it complies with all our government and RBI regulations. It is completely secure and resilient as well, and it complies to all the global standards. And since the platform offers so many things, we've made it really flexible so that customers can mix and match and use whichever solutions they want, right? It doesn't need to be buy one thing and you're stuck with it for life. As your businesses and consumers evolve, how do we allow that flexibility to adapt, right? So that's what it's all about. And the second part is, we keep talking experience as a service and empathy, but how do we really practically apply it? Now enterprises not only want to know which technologies and systems they want to use, they also want to know what the leaders are doing and how mature they are in delivering these personalized experiences, which is what this empathy in action assessment is all about. It's a maturity model which tells you how capable are you in delivering personalized experiences. As you move to the right and top, you're able to deliver really empathetic personalized experiences, whereas if you're in the bottom and left, you're still focused on transactions and interactions. And we are here to help you how to move up the maturity curve. And the third part is empathy again is not just about feelings, it also has real business value. When you treat customers with empathy, you gain their trust, and over a period of time, trust leads to loyalty, which is what all our consumer surveys are saying. If a business is going to treat them in a personalized way, in the way which they like and prefer, they're going to continue doing business and they're going to buy more products and services as well as recommend them to friends. On the flip side, the CX leaders are saying, they themselves are saying, we know we are not invested enough in delivering these personalized experiences. Less than half of them say they're able to really deliver personalized experiences at scale. And to kind of sum it up, here is how we can help. So these are my 3 key takeaways from you. One, we help you become agile and scale with our cloud platform hosted right out of India. And it's not about digital adoption metrics anymore. How many downloads, how many users, how much time you have spent, right? That's gone. Our customers really satisfied in the new digital world. We'll help you get there. And how do we do it? We help you to tap into the power of personalization to deliver truly personalized experiences. Thank you. If you have any questions, you can ask me, or we are here in the hall, and you can reach out to us. Thank you.
All right. Thank you very, very much, sir, for the presentation. And everyone, now it's time for us to begin our next impactful panel discussion. And this panel discussion will be on envisioning billion-dollar brands and beyond. I'm sure you all would want to listen to this complete panel discussion. And now it's time for me to invite our moderator and all our panelists on stage. Once again, I request all of you, as we welcome all our moderator and speakers, please do give a round of applause. Okay, here we go. And firstly, for this panel discussion, I'd like to invite on stage our MD and CEO, Banking Frontiers, Mr. Babu Nair, our moderator. Now I'd like to invite the founder, One Silver Bullet, Milan Ganatra, our panelist. Now can we have on stage the co-founder and CEO, Lane Dane Club, Mr. Bhavin Patel. Next up, we have the CEO and co-founder, Freo, Mr. Kunal Varma. Can we also have founder and CEO, M-Pocket, Gaurav Jalan, join us on stage? Now I'd like to invite the founder and CBO, Bharat Next, Mr. Aljo Joseph. Now, ladies and gentlemen, welcome our next panelist, the founder, Hot Food Technology Solutions, Mr. Vivek Naidu. Now, can we also have on stage the CEO, CampSpay, Vasant Jayapal. Where are the sound of applause? And last but not the least, I'd like to welcome the founder and CEO, Easy Loan, Mr. Pramod Katuria. Welcome, sir. Welcome all our panelists and a moderator. Once again, to tell you, this panel discussion is on envisioning billion-dollar brands and beyond. This is going to be really amazing one, I'm sure. Now, I'd like to give it up to our moderator, Babu, sir. Over to you, sir.
Thank you. Thank you very much. So, one of the biggest challenges is to have such a big family and to be managing the big family. But then the beauty of this panel that we have today is that we have aspiring billion-dollar brands. So aspiring unicorns, how we are building the billion-dollar next. And last time when we had this chat, we had one of our eminent investor panelists saying many of the billion-dollar brands are at a very nascent stage today or are not even born today. So how are we going to build the billion-dollar brands next? And that is what we are going to do in this panel. I'm really honored to have such wonderful people. I miss at least one or two ladies in this panel. I should have probably had a lady or so, but of course we will continue and we will do it in the next few panels as well. Well, friends, some very interesting and thought-breaking concepts on how we are going to build the $1 billion next. And in this, let me just start with my first question. Okay, how has brand building evolved over the last few years? We have seen brands like Coca-Cola, erstwhile, the last yesteryear's brands, which have created a big mark for them. The financial brands like Paytm or like any of those existing, the recent Open, which has entered into the Unicorn Club, doing a very big mark, creating a very big mark. So how has this question of brand building evolved over the last few years? I think I would like to start with Kunal. Kunal, because two things. A, you were already a big brand, and from there you merged with a bigger brand called as Frio, and now you are a unified big brand. So how are you looking at creating the big brand of the future?
Sure. Thanks, Babu. I think, friends, so Frio is a consumer neobank, and we also have the brand name MoneyTap, which has been India's largest credit line product. So that's what Babu is referring to, and then two big brands in that sense. I think it's a complex question, but if I were to distill everything down to a few points, so the brand building, I think for us, has been very ground up, right? It's not about having spent like a ton of money to buy customer loyalty or to bribe them into falling in love with you, because there's only so much you can do in terms of spending and throwing money at customers. So for us, the learning has been that it's been a lot about obviously trust, which is to get to customers who actually believe that you are going to offer value. But it has also been a lot about fighting impatience. So when you're building a brand for us, and we've given credit to more than $1 billion, and product is getting used in about 85% of India's pin codes today. So we have seen that customers today are competing for attention, and if your brand or if your product is not solving a fundamental pain point and is able to stick around, then you kind of lose the brand battle. So for us, it's not been about convincing customers to like you because you are giving them something additional, but fundamentally fighting the core impatience that each of us has, where our attention span cannot last beyond a few minutes, and also a lot about solving like real pain points and hence developing consistent trust. So I would maybe let's lead with those 2 points.
Wonderful, wonderful. I think that is a good perspective to begin with, and from there I would like to go to Eljo. Eljo, you have been also looking at creating a bigger brand. So what has been your perception about the brand evolving over last few years?
So I think there's no doubt that there's been a significant evolution in terms of how you need to approach brand building now, right? So earlier, brand building was done more from a utility use case standpoint, right? So all of us are familiar with Fevicol showing that nothing sticks better than Fevicol, right? Or all of us remember empathizing with a Lalita ji when she used surf, right? And those are all utility and proving a case that I can do this, better than the other brand, or I'm the best product out there in the market conversation. But right now, brand building is more aspirational in nature, right? It is not just about utility. It's about what sort of value are you creating for a set of loyalists, right? And this does not have to be the entire market. And once you're creating that value, how do you make them a part of your journey? And that is the fundamental shift in terms of building a brand that has come about, as I see. The other piece, which Kunal also alluded to, is the fact that customers become impatient, and customers become impatient over multiple channels, right? So your brand building is not just about solving their problem. It's also about solving the problem and making them an advocate for you, right? So it is not just about TV advertisements, channels, all of those good things. It's about actually walking the talk and actually serving a larger purpose. And that's how I see. I mean, happy to add on as we go on, but I thought these are the key points that could be.
Wonderful, wonderful. So we are all now in this panel. We are in a 2-minute Maggie kind of show where we are keeping it very crisp, but at the same time we will make sure that we deliver the right kind of value in that 2 minutes that we are talking about. Great perspectives. And one important thing that we can note about this is fintech marketing is much different than that of the usual consumer marketing. There has been a lot of intricacies that get into it. Many of it is only B2B, some are B2C, some are B2B2C. So you have to really create an ecosystem for that. And we have also seen a lot of ecosystem-based marketing which is also been. I'll come back to that ecosystem marketing next. But one important thing is, on one side, branding or building a brand for Bharat, and the other is building a brand for India. And at times it is a mixture, or it is a integration of India plus Bharat together in that brand. And we have some very interesting fintechs here who have been looking at both the sides of it. I would like Gaurav to just share some perspective on how you have been looking at creating a brand for India and for Bharat, and how you are integrating that when there is a need to integrate it.
Thank you, Babu, for the question. I think it's very interesting because the business that we are in, we are actually servicing Bharat. So we are in the business of providing personal credit. And we've provided credit to more than 2 million individuals and cover about 19,000 pin codes in the country. Interestingly, the average age of our customer is about 22 years old. Right? So we're actually servicing the youth of this country, wherever they're located. And about 80% of them are outside the tier 1 cities. So what we've found and the approach we've taken is one, there's really not a differentiation when you're trying to build a brand for Bharat versus a brand for India, because the brand that you're building for Bharat also aspires to be the India, right? So these are people who want to be have the same levels of service, the same kind of facilities and things that are available to people in the metros, right? So they're aspirational. So in that sense, the brand building has it's not really differentiated because it's aspirational. And secondly, a lot of the brand building is about customer engagement. It's not just about creating brand awareness, right? So, you do like large TVCs or you do sponsorships that create awareness of your brand, and maybe a lot of people see your brand name on TV. That is one way of going about brand building, but that is just creating awareness. Actually, building a brand is about engaging with the customer. And there what we found is engaging with the customer through various channels. Like especially social media today is, especially the youth of this country, the tech-savvy people, they really engage with you on social media. And it is through engaging with them that you actually create that brand, in responding to their questions, helping them understand your product, your service. I think that is where you really create the brand.
Excellent. Bhavin, any additional point that you would like to add on?
I would say you have chosen both the guys who are serving pin codes across India. So both of us, I think, provide loan service across India, serving each and every citizen of the country. And if we look at the question which you have asked, I would say Bharat or India. That is a impression which is created on Twitter or some digital media. For us, it is just a segmentation. the way we look at different segment, okay, how male consumes specific service or female consumes, or similarly, maybe by age-wise, etc. It's just a little difference of the way people consumes your products or services when we call about Twitter's Bharat versus India thing. Now, why we say so and why we believe so, probably some people may agree to it, some may not. But see, traditionally, if you look at building a brand, people used to bring a lot of faces to establish your brands. And some film hero would first sell some bottle, then he will sell another bottle, then next 5 years he'll sell another bottle, because people used to believe that, okay, this is what I see and probably this drink can give me such kind of energy. Now that has changed. After we got WhatsApp in our life, after we got Facebook in our life, lot of other social media in our life, that knowledge level gap which was there between presumed India and Bharat has changed a lot. Today, my father at the age of 67 years, he goes searches on Google just by speaking to Google, and he gets all all information which he wants to consume in Gujarati language. Now you tell me.
Market as opposed to tier 1 market. So it's basically the convergence of media which is playing out very, very important. I think demand was always there for products. There were always companies which were offering products in these markets. But now with access to information, and which is what we say that, information leads to knowledge and power and so on and so forth. So I think, there is a voice which is coming from tier 3 and rural market, which is building this Bharat community.
Wonderful. Thanks Pramod for chipping in between and sharing that particular perspective as well. Now let's go to the next perspective. Today we are talking about creating a global brand. India is looking like, for example, Singapore. I always envy that country whenever I go, because you can't sell everything that is produced or what you trade there in that country. They always have to look at the global market. And in India, we have always been fortunate that we have a market for everything within that country. Today, slowly, every fintech, every technology company is looking at global market. And what are the biggest enablers that come into picture when you create a global brand out of India? Because creating global brands is something that is very close to all of us, because we want to see more and more Indian brands growing global now. Into the global fintech ecosystems, into the global banks, into the global consumer base. So how are we going to build that? Vasant, you have been into the payment sector, you have worked with CAMS, now you have launched CAMS Pay. So what do you think is your reading, and you have been with FSS in the past, so you know how the global markets have been captured.
Okay,
what do you
think? Babu, for that introduction. I think good afternoon to all of you. I'm already a part of a brand which is already $1 billion value, so I'm very proud to be part of that group called CAMS Group. And within that, like Babu mentioned, I represent the payments business called CAMS Pay. Recently launched this brand. One of the objectives that I have is to take this brand, perhaps create a $2 billion business within what we do. Now, we are in a time where I think it's no longer we look at other developed markets to see that there are global brands are created out of big countries like the US or the Europe and so on and so forth. Very proud to say that there are many Indian brands which is resonating with the thought of having been able to spread go across the border and creating a lot of things, especially in payments and other things. In this conference this morning, I met with somebody who is actually working on something to make sure that Indian processing environment, the technology and the fintech platform, whether we will be able to support other brands outside of the country to do this. So, in a manner of speaking, I think there is a reverse brain, a brain drain that is being enabled thanks to the fintech. That's one point I want to make. Secondly, going back to the history of where I came from, I think the company that I worked for, FSS, what we realized was we started off in a small place within Chennai, and then we served the entire banking ecosystem within this country. We put a lot of bankers put a lot of trust in the brand, and then they have over time. At the highest point, we would process about in the excess of 80% of the ATM and the point of sale transactions within the country. That's the kind of number that we realized. Along the way, what we realized also, the brand has had more value than what we offer to the Indian ecosystem. And the trust and the customer advocacy. I mean, technically the Indian bankers who went abroad, went outside of the country, they invited us to participate in their programs and helping them to enable multiple things, including regulators, including payment processors. And we didn't actively work on, building our brand per se, okay? This is the hard work, a combined work of, let's say, 2 decades, what we delivered here, the trust that was created, the customer advocacy that we had, that took us to a global level. And today that company does more business outside of India than within India, and they're far more visible. It is possible. I think it's not that only Americans can do great branding, and as Indians as we are equal or if not better than them. And fintech is the name of the game. I think we will definitely put our flag on the global map in terms of taking the Indian brands everywhere else.
Interesting. In fact, when I started my career in mid-90s, there was a saying, all the best technology products has their hardware manufactured in China, software manufactured in India, and is marketed by a smart Americans. Okay, and I think that is something where we need to break the chain, and we need to look at how Indian brands can actually create that global level of aspiration and a global impact. I think, Milind, you have been also doing a lot of work in the B2B space.
Yeah.
How has it been?
So it's been wonderful. That's currently I'm into my second journey, but my previous company, which was a product company focused on asset and wealth management, and we had customers in 40 plus countries. And obviously we were initially focused only on India. And what really worked for us was the concept called brand storytelling. Because as you're a smaller brand, I mean, you are actually not a known brand. What you really need to know, what you really need to do is storytell your brand, which will enable the customer to understand the people and the people behind the product and the company. I think it really inculcates a lot of confidence and trust, which is what really worked for us. And when the customer gets into your funnel, he is confident about you are able to solve their problem and able to understand that. So to me, for any Indian technology company, specifically because I was running a technology company at that point of time, important was a concept of brand storytelling. Because in a B2B, that is what would, to my mind, would work. So that is what I really followed in my earlier avatar. Right now, obviously I'm focused more on domestic, but the aspirations are to take One Silver Bullet as a gateway platform to global markets. And we would follow the similar concept of brand storytelling, because you can't, as a B2B brand, you can't put in hoardings, you can't really put anything. So storytelling and finally your product delivery or the technology what you're going to deliver is going to play a massive role. So my core emphasis here would be brand storytelling as a key factor for any B2B to really establish in global markets.
Fantastic.
So, yeah.
Great. Thanks, Milind, for that. Any quick one you want to make?
So clearly what's happened in India over a period of time is there has been an aggregation of a lot of factors that is going to help us build powerhouse brands out of India. What's really happened over the last decade or decade plus is that a lot of Indians have worked abroad, they've traveled abroad, they're familiar with international cultures, right? And it's not just people sitting here and serving international clients, it's people who've lived there, interacted with other people. So it is not an alien culture anymore, it's a very familiar culture that you're going to try and serve elsewhere. The other piece is all the infrastructure needed to build the brand is already in place in the country, right? Be it your technology in terms of CRMs, be it in terms of building the world-class software you need, being able to run digital campaigns globally, being able to create content that can be used globally. So now, instead of a smart American sitting out there who's marketing, we are going to employ the smart American to market the products for us, right? Because all you require is essentially local intelligence, right? And if you think of it, it's no different than catering to different regions in India. So when you start off in Bombay, you're familiar with this region, or you're familiar with the metros. When you go to cater to Bharat, you need local intelligence out there. When you cater internationally, you require the local intelligence for the market, which can be hired very easily today. So what we've built is the management capability, the technology systems, the approach to brand building, right? And all of this talent is now readily available. The talent out here understands the market internationally. And all of this is coming together to create a very potent combination for the future.
Wonderful. I think the COVID or the pandemic has also made marketing and brand building globally standard. Now people are very comfortable going global and doing their branding through all these digital channels, and that has made it so smart for people sitting in any part of the world to market to any other part of the world. Let's quickly get on to the next question. One is, of course, thinking outside the box. It is very essential for anyone to think outside the box. The brands have to really look at not just a conventional way, because fintechs are tight on budgets many a times. Even if they acquire the investors' money and things like that, ultimately there are challenges in marketing their products when they especially want to build the brands. Some resort to burn the cash and get into all this, freebies and attract the customers. And many a times it has also proved that the customers who come with freebies are no-bees after some time. So under such circumstances, Vivek, you have been trying to do a lot of work. What are the out-of-the-box things that you have been looking at?
Thanks, Babu. We are an enterprise fintech. So to that extent, I think the most important part is the customer has to have a good value proposition. And the most important focus has to be the customer experience. So no matter your ability to build a brand will eventually depend upon what the customer experience is with you, no matter what your ad campaign tells them or whatever your marketing collateral tells them, it does not matter. But eventually their ability to stay with a particular brand will come from. So all of the products that are there in the financial services space are now being reimagined to that sense. And I think the competition is not, and I come from the loan space, to that extent my knowledge is around that. And now I don't think the competition is between two lenders. Today actually we are competing with Amazon in terms of customer experience. 10 years ago, you never thought of a scenario where you'll buy a shirt, keep it with you for a few days, think about it, then call Amazon back, call the vendor and he'll come and pick it up from you. You don't have to do anything. And today all of that is reality. It just completely transformed the customer experience. And I think the competition for a lot of us will come from our ability to completely reimagine the way products are built, the way that they are delivered, the way that they are actually experienced by the customer. And that I think will be the roadmap for $1 billion or a $2 billion or a $10 billion brand.
Interesting, interesting. Kunal, any additions from your side?
I think you touched upon a lot of the interesting points, like, the different ways in which companies are approaching brand building and what could be disruptive or out-of-the-box thinking. Few things, right? I think today's day and age, I think everybody's talking about fintech. I mean, the world is changing so fast that the disruptor is getting disrupted, by the time they get comfortable with their strategies. So there was a time when you had to really deserve and earn the customer's trust. Then you had like a wave of companies come in, and starting from cute to wild messaging, you kind of, bulldozed your way through. In some cases, you bought the customer's love by throwing freebies, and eventually ran out of freebies and then hoped that the customer would stick around. But I think now some of that notion is being turned on its head, in the sense that think about it, right? If there are two competing apps for ordering food, if I go on one app and I want to order a biryani, and if I'm getting a 10% discount, and my friend, let's say, Gaurav is sitting here and he decides to go on the competing app and he gets a 15% discount, I'm going to shut my app and say, Gaurav, order extra one for me also, because why should I pay, extra? So I'm not really falling in love with the product, but with the idea of actually that freebie. Now, if you have to disrupt and turn this on its head, why not think about a scenario where you don't have to buy the customer's loyalty like that, but you actually have to convince the customer to pay? So I think one of the most counterintuitive things to do is to force yourself into a situation as a brand wherein you offer a product
that you want the customer to pay for. The previous panel, somebody alluded to this whole mystical concept of making money. Well, for a lot of companies, it has become very mystical because like people are like, what is profitability? Like, what are you talking about? But I think if you go down that path, then you realize that there is much more natural, sustainable, long-term brand building happening. So making the customers pay for it, I guess.
Wonderful. While I want 2 more questions to be taken, in the paucity of time, I would probably go for the last question. In that, you can also integrate the question that I wanted to take. The next question that I ideally wanted to take was about alternate brands. How are organizations actually working on alternate strategies from illness to wellness in insurance and creating an ecosystem? So we can talk about that also. But what I say is, from each one of you, I wanted to hear one interesting piece that you think is interesting for creating the ecosystem brand of the future or the billion-dollar brand of the future. Let's start from there.
See, I'll extend the question which was related to global brand. One of the biggest trend which I have observed over last 4 or 5 years, and all of us might have seen that, the trend in the advertisement of IPL and World Cups, cricket World Cups. So initially it was always Cola Wars, then it shifted 5-7 years back, it shifted to Mobile Wars, and then last 3 years consistently those are brands where those are more of concepts or product which you are not touching. This year amazingly different things which we have come up, and that is going to change the huge market at a global level. So I don't know everybody has seen that trend or not, but the products which are being branded through IPL right now, those are creating a big competition and they are standing against a lot of betting companies at a global level. Previously they were not able to do it because they did not have consumers to understand the behavioral pattern and make better products. Today, as he mentioned, that we have better product managers to build better product for the world because they understood those concepts. We were used to make better softwares. We used to make, but we required guidance then. Today, no, it is not required. We are able to understand those over last 10-15 years, and now we are building products for globe and we can sell those. Third, which we are using in our communications, and while we are building a Lending Club as a brand and InstaMoney, which is our loan product, we are talking to customers on whatever facts and figures are. So InstaMoney is a loan product where we give loans only up to 25,000 rupees. So the first communication you see on all our brand communications is maximum loan amount is 25,000. If you are looking at 30,000, please don't come. Because once you come here and you come to know कि अच्छा यहाँ तो इतना ही मिलेगा, we don't want that disappointment to come to us. So I believe that way is changing. So one, good products combined with clear-cut communication messages are going to be used for building these brands.
Wonderful. Great. Milind, a quick one, not more than a minute.
Yeah, I will not take more than a minute. Yeah. So based on my B2B experience, there are 3 things which are critical. Community building, which is in case of a B2B, how can you influence the set of developers? Then is the influencers, who are the consultants and so on, who can help you build the brand, and obviously the network. So the newer the newer platform I'm working on is exactly on these 3 concepts of trying to create network, build a community, and influencers is what the brands can be built without spending any penny, especially the B2B brands.
Fantastic.
I think to build a long-term brand, one has to obsess more about the product. You have to think long, you have to play the long game. You have to pick the tough problems first, which is to solve for a customer's real pain, which the product does, and let that go from customer to customer, and the compounding effects of that over a period of time will basically build a brand which is sustainable, which is indestructible. So rather than saying that, rather than looking for the answer for brand building inside branding, you have to look for the answer inside product and then solve that problem first. So very deep product obsession, solving the tough problem first and thinking long.
Perfect. Great. Gaurav, your take on it.
Thanks. So I think to build big brands and sustainable brands, one key element that probably every business needs to have is using your customers as your mascots and your ambassadors, right? So what we commonly call referrals, right? I think that is something we've not really discussed in detail, but I think ultimately if you have a good product, there is no reason why you cannot use, your own customers to actually spread the word and build your brand and be your ambassadors, right? So I think that is very, very critical, and we as a company have that as a very important focus, because ultimately if your customers cannot be your ambassadors, you have to question what is lacking in your brand.
Interesting. Anything from your side?
I'm so glad I'm just fifth on this line, because I think I'd struggle to come up with more points than that. Right? As I go through the list, I see, I think all the great points are getting covered, right? And so clearly, I completely agree with everything that's been touched upon here, right? The future is about advocacy. It's about having that great product first. It's about reflecting your brand through your operations, all of those good things, right? But one fundamental point which I would like to touch upon is also to do with the evolution of the Indian customer, right? So first of all, you cannot build value on an imitation. You have to be an original, and there has to be a value that you add to a certain segment. And traditionally, when somebody you looked up to kind of used that particular product, as a consumer who looked up to that person, you associated value with that. Now what's happened in India is the traditional role models are beginning to change. So you don't require an actor or a star anymore, right? There are brands that are being built digital first without any brand ambassadors till a very, very, very late date. So now the whole idea is in a certain micro market or a micro segment, how do you build those advocates for you, right? And these don't necessarily have to be those paid influencers.
Perfect.
Right?
Perfect.
So how do you kind of work towards making all of these guys your advocates through your actions and celebrating them as a part of your community?
Pulling advocates.
Yes, I think that's going to set the tone for the future.
Perfect. Quick one from you, Vivek.
I think eventually your customers are going to experience your brand through your own people. So I think we are actually putting a tremendous amount of focus into building a brand to attract and retain good talent. And in a competitive market, that's become very important. So once you have the right talent, then people tend to experience the brand much better.
Fantastic. And as a B2B brand, you have definitely got a lot of problems when it comes to budgets, and you can't use all the B2C strategies.
Yeah.
Great. Vasant, quick one from you. And I have a special question for Pramod also.
Okay. So to my mind, I think it's different for different businesses when it comes to building the brand. It's a journey and it's not a real destination per se, right? So the fundamentals for me, the fundamentals will remain the same. You got to keep what your core value proposition is, and then start building other bells and whistles around that business. There are businesses which will take about in a few years to become $1 billion business, for example. There are businesses who've been around for like decades to become that size and scale. So it's all about the kind of business that you're into and the way you want to do. And to that end, I would like to believe that journey is going to be very, very unique. And I will stick to my basics and fundamentals while leveraging on what assets you build over a period of time and making that sustainable.
Perfect.
And continue to be in touch with your customer, because the customer is disrupted, bombarded with various other multi-million options at him. And we are going to be, talking, speaking, listening into the, customers' needs, the ever-changing needs. That is going to be my mantra of, building the next $1 billion business.
Wonderful.
Thank you.
Thanks a lot. Pramod, before you say one more thing that I wanted to ask you, how are ecosystems working towards building the brands of the future, apart from what you want to say about the brand? And a quick 1 minute.
Yeah, sure. So often we put brand and marketing campaigns together. Often we also think that a good brand will translate into higher margin. I was talking to Kunal on another margin business piece, but Apple and so on and so forth, every time we talk about a great brand, we almost associate by default with a higher margin or a gravita for the brand. To me, brand per se has a much deeper origination, and it is about really finding a purpose for business. And that translates into the brand story or the brand promise, and which is what drives everybody, whether internally or externally, the stakeholder, distributors, or the consumers, to expect what to expect from a particular company. So, how the ecosystem is changing, I think if there is one change, and it's kind of writing on the wall, that the way media is consumed today, the shared media has become so much popular that it has almost given run for money to the paid and the owned media. And traditionally we've seen that the more you pay in a particular campaign, you're able to get that much eyeball, return on investment, so on and so forth, and eventually create a better brand. Today you need to, I think, hear the individual stories, build the stakeholder stories into your brand stories. And that's where I see the ecosystem or the network effect going in, wherein a set of cohorts on the distributor side or your users of services or the influencer are talking about in unison certain brand promises that you wanted to create and emerge coming together. So since we have limited time, I'm kind of keeping it very, very short. Otherwise, if you look at marketing spends today, or the way organizations are built, you will find there is as much focus given to, not within digital also, to shared media, as earlier it was 90% owned and paid. It is now 30% split each.
Great. So thank you very much, Pramod, and thank you very much, honored panelists, for this wonderful session. Last but not the least, at the end of the day, every brand is built upon something called as trust. Unless and until there is trust, there is no brand that is made. And the ecosystems are basically the foundations on which newer brands are built. The more the ecosystems are created, the more the brands thrive. User-led ecosystems, the brand-led ecosystem, customer-led ecosystems, or employee-led ecosystems. Ultimately, we are into an ecosystem game today. So thank you very much, everyone. We have had a wonderful session. I would have loved to take it more, but of course, there is a paucity of time as well. Thank you very much, and look forward to some wonderful participation from all of you in the future also.
Wow. Well, this was indeed a power-packed panel discussion. I hope you all have enjoyed this one. Thank you all the panelists. Thank you, our moderator. And now we would like to present the token of thanks to all our panelists and our moderator. So I request Babu sir to please present the token of thanks to all our panelists. Firstly, to Mr. Pramod Kathuria sir, the founder and CEO Easy Loan. Then to Mr. Vasant Jayapal. Thank you, Mr. Vivek Naidu. Thank you, Aljo sir. Thank you, Mr. Gaurav. Thank you, Mr. Kunal Varma. Thank you, Mr. Bhavan Patel. Thank you, Mr. Milan. And last but not least, thank you, Mr. Bhavan Patel. Thank you, all our panelists. Can we have a group photo once again? And thank you very much, Babu sir, for conducting such a power-packed panel discussion. And next up, we have a presentation. Okay, so now, next up, we have a presentation. As I said, this presentation is the Smartforce Video KYC with Shrink1 Compression by Dr. Mohan Chandrasekaran, the founder and CEO at Stringo Software Private Limited. So I request all of you, let's welcome on stage Dr. Mohan Chandrasekaran. And everybody, I would like to tell you, we have panel discussion. Please feel free to ask any questions you have, as you're not having any questions and going with the Q&As. So if you have any questions, we will be happy to do our Q&A. Thank you so much.
In a world where every business is going mobile to acquire and service customers faster, why should you get left behind? Do you have have a smart sales guy or just a sales guy? And is he unable to fulfill customer requests at the time of transaction? Introducing Shrinkman, who helps your sales guy to fulfill all needs, even with low latency like 2G connectivity. From banking to insurance, Shrinkman powered with AdStringo helps sales guys to onboard customers on point of transaction itself. Shrinkman helps in faster turnaround time, reduce operational cost, no paperwork, no delays, and improved customer satisfaction. Enterprise money spent on Shrinkman delivers 90% savings on storage and network cost. Shrinkman helps speed up enterprise customer acquisition turnaround time from a week to a couple of minutes. Thinking of creating a digital channel? Then wait no more. Call Shrinkman to help operate branchless in 6 lakh rural areas.
Go branchless, go digital.
Visit AdStringo to know more about Shrinkman.
Good afternoon. I am Mohan, founder and CEO of AdStringo. I am ex-CTO of Reliance Capital before I turned entrepreneur. That's my background. I'm a pure tech guy. So I'm not going to bore you with all tech decks. So this is just for a reference. So who we are? Actually, we are a data compression company. We are the only company in India formed, and I done my PhD on creating this algorithm. So what we actually do, we have multiple data, either data through an image, either through a phone click or through a scan. From a image algorithm to a PDF algorithm, to a voice algorithm, to a video algorithm, MS Office compression, as well as your entire healthcare files. If somebody is from insurance, so you have all your healthcare data for your claim settlement. So we work on all file formats across the enterprise. So instead of you actually create a file, right, you creating a file in a compressed state. So we are a company which actually created a file in a 1/10 of the size. Rather than creating a 1 MB file, you are now creating an 100 KB file. So that's where our strength is. And the consumer or the user do not know, instead of he is creating a 1 MB file, he is creating a 100 KB file. So transfer of the file, as you see in the video, it's like an instant. Instead of you transferring 1 MB over the network, you are transferring 100 KB. So there is no compression, decompression. It's only a compressed file from a source. So we are the only endpoint company which is present in the world which creates the file at the source rather than compressing the file at the server. So we also have a technology to compress file on the server, but our strength, our algorithm is been designed to work on endpoints. We are based out of Bombay. So most of the time we are working with banking, insurance sectors, NBFC sectors. The biggest challenge is transmission of the file. Whatever file is getting captured at the customer need to come for a processing in much faster time. Just imagine you are sending a 1 MB file over the network from a branch or from the field. Instead of that, you are sending a 100 KB file using our algorithm. So it's a wow factor for the sales guy as well as for the customer. Your customer onboarding time takes a few seconds to complete rather than waiting for minutes on 2G network. This algorithm has been designed specifically to work on all the file formats. It's one single algorithm which can embeds to your existing investment. So whatever is your application which you are currently running, wherever there is a file source, creation or attachment or transmission, you can embed this algorithm. So the users in your company do not know that this algorithm is embedded. It works on the background, it works seamlessly with all formats. So there is no, since this algorithm is written in language C, this can work in all platforms. Microsoft platform, Java, Linux, Android, Apple, you name any technology, we have our algorithm embedded already. So what is the primary purpose from an IT side is when you go digital, now everybody are going digital. Private banks are already gone, now public sector banks are going. When you go digital, you are creating terabytes of storage, which is an operational cost, nothing to do with business cost. So it's become very difficult to justify from an IT perspective, saying that why you need to spend so much of money on maintaining your storage, backup, and your redundancy. Using our algorithm, just imagine rather than you have a terabyte of backup, you are now getting a GB of backup. Your cost in the cloud, it's going to be reduced significantly, and your retrieval also becomes much more faster. So it's a huge benefit. For every money spent on actioning algorithm, it's as a 90% savings what the bank and insurance company gets. As I told, this MS Office, email attachment, and live video streaming, which we already have our banking customers which is already using in a beta stage, right? It is so successful. Example, one large insurance company which is doing claim settlement instantly using video streaming on the accident spot. Even in 2G network, they can able to view, zoom, and find where is the dent, and they can assess and tell saying that how much is the claim percentage they can able to settle on the spot. Right? So this is where the nature of our algorithm, even at the CCTV level, from a government standpoint, we integrated our algorithm to the challans which the traffic people are getting. So the images, if somebody is using MTP app for paying your challan fines, our algorithm is already embedded. So it can capture real time, it can compress, and it can able to send a challan to a owner of the vehicle with a crystal clear image saying that what is the violation. With this one, we also developed a lot of solution using our partner companies, right? All the solutions are a corporate process, right? Any corporate process which has documents, data, our algorithm is embedded. If you already have a solution which is consuming data, you can always embed this algorithm in a seamless way. The end user will not come to know that this algorithm is embedded. So I am going to now discuss about your video KYC problem, because most of the banks which are signed up with us are taking so much of video KYC which runs with so much GB of data, and you don't have bandwidth to transmit. So the sales guy are forced to come to the branch. Even in branches, if you are running with a low bandwidth, you do not have a ability to transmit that file. So you have to wait for the operations of the branch to over, and transmission happens in the night. And not all the files comes on one shot. So using our algorithm, either in a smartphone where people are doing a video KYC onboarding, or through a web platform, they need not to come to the branch. It can happen seamlessly on the endpoint itself. And this is an example. If you are having a 5 megapixel, 8 megapixel, 13, now you just imagine people are coming with 50 megapixel, 100 megapixel. Yeah, 87 MB is impossible to get transferred in a 2G network. Even your 48 MB file not possible to transfer. WhatsApp does not allow you to attach more than certain MB. It's having a restriction. And WhatsApp does cropping. It does not do compression. It does 320 by 240 compression, and that particular file is useless for the backend operations. Right? So it's very difficult for a backend team, either claims team or a processing team, to use a WhatsApp file or any cropped file. And second one, as per RBI guidelines, any tampered file which is lost its original nativity, it's not been used at the court of law. So what we actually maintain our algorithm is a tampered, its original file format. Rather than you develop a 1 MB, you are developing 100 KB file. Using our algorithm on the video, you are generating a 2.5 MB file. So I have a counter outside, which I am playing a video which is a 500 MB original file. Now what I am playing is 25 MB. It's a compressed file with a 4K resolution. So any people who want to get that file for processing, we have an ability to compress that file in a lossless quality. To human eye, it's difficult to find which is original and which is compressed. So that's a nativity of our algorithm. And our algorithm's specialized USP is you go higher the resolution. You go 108 megapixel, which gets you 300 MB or 400 MB, we get 96% compression. It's ulta. Means not the US level, you go higher, the percentage of compression comes down. As is you go, our algorithm is designed that we know that the camera is not going to stop. So people are going to reinvent only on camera because there is no capability from a mobile it's coming. It's all only camera increase is coming. So your size of data is going to be getting higher and higher. And you don't have a storage. And a storage company is going to live forever because people are going to consume. And our ability is to make sure that there is a reduction on cost for storage as well as for transmission. And the biggest thing on any digital account opening is, can you onboard a customer? We have one of our NBFC company, which gives your loan in 4 hours time, right from application to disbursement, with 2% extra interest. In the market, if it is 12%, this guy is charging 14%, because the person in the market, they want for unsecured loan in 4 hours time. And you can able to use this technology even in a village or in a town area where you can able to disburse the money, 10,000, 20,000 for NBFC level, right? You can settle on the spot using our algorithm embedded to your application. So one thing which I want to tell about the video KYC is the capability in which we had actually built with our partner. This algorithm allows you to detect using an AI pattern. It recognizes the photo in the video, and also it recognizes the photo in Aadhaar, PAN, verifies both, and also gives you a green channel when the file gets uploaded. So this has the capability to read internally and also transmit. So we also works on 1G network. So we transfer not as a file, we transfer this as a bytes. So you make sure that the file receives your server and the files get regenerated in 100 KB rather than 1 MB. So our algorithm has AI capability, it has a robotics capability, it has a machine learning capability to make sure that any of your problem, right, can able to get resolved. So what we had actually reinvented our algorithm in this COVID time is, if the file comes through low quality for whatever reason, because of size restriction from your corporates. So if somebody is uploading a 240 pixel and you want to have a 1K, 2K, 4K, our algorithm can able to enhance the file. It's not only compressing the file, it also enhances. You can enhance a 240 pixel to a 4K. So this has permutation and combination in all level, which is purely algorithm. We are not selling software. This is the pure algorithm which gets embedded. When somebody open the camera, the algorithm will start automatically. The file which is getting created, it's in a compressed state. And the receiver did not to do WinZip, unzip, nothing is required from a user level or from a receiver level. So that's a uniqueness of our algorithm. So one great quote one of our friend has told, it is like you are losing. So I am a fat man, right? If I want to shrink myself, then I will feel very, very happy because I become light. If you are running with terabyte, petabyte of data, right, it's going to be big difficult for an operation activity to continue. Just imagine I am going to be like a 60 kg rather than 90 kg. I feel very happy. I can run. Now I can't run. Right? Any IT operations will have the same problem, right, when they become 100 kg. Just imagine if you are 50 kg, right, like a Taj Mahal, you will feel very happy. Right? A lot of people see you and you also feel happy when you see in the mirror. So that's where we are specialized, and I take this time. Whoever want to see what we do in detail, we can visit our counter and I can take your questions offline. Yeah? Thanks for your time.
Thank you very much, sir. All right, everybody. So next up, we have something very interesting coming up, which is a fireside chat. Okay. So as we have all our fintech leaders in here, right, I want to ask you something. And the answer of that particular thing is not a very serious one. I would want you to give me some out-of-the-box answer. Okay. So I've just read a joke recently, but I want to ask you that. So according to you, what is the fastest way to save money? You know? So these days I'm facing a lot of problem because I have everything on my phone, GPay, Paytm, you know, phone pay, everything. And it's really difficult for me to save money because whenever I have to do the transaction, I just click onto any of those portals and I pay my things, you know, and I find it so easy. So eventually my money balance is going low. So what do you think? What is the fastest way to save money? I've any which way given you the answer. Yeah? Can someone give me the answer? Huh? Totally. Yeah. So this is what even I have like kind of concluded. You know, if I have to save money, I must delete all the apps like, you know, the GPay, the Paytm. So this way at least I'll be able to save some money. Otherwise, when I have to shop, okay, I have GPay. Khat se ka transaction ho jata hai. So, you know, this is another drawback. your savings go down. Anyways, cool. So now I think we are pretty much ready for our next session, which is the fireside chat. And I'd like to tell you that this fireside chat is about building an Iron Dome for BFSI, and this is surely going to be an interesting one. So for this, now I'd like to invite on stage the technical evangelist, managing engine, Mr. Nadeem Ahmad. Everybody, welcome on stage, Mr. Nadeem Ahmad. And along with him, I would also like to welcome on stage our group editor, Banking Frontiers, Mr. Manoj Agarwal. Please add some energy to this event by the sound of your claps. Please do that. I must tell you, this is good for your health also, you know. It increases the blood circulation. So yeah, it's good. Welcome, Manoj sir.
Thank you.
Can you have Nadeem sir?
Yeah.
Over to you. Okay, now I'd like to give it over to both of our personalities. Here we go with the fireside chat. Over to you, sirs.
So can I turn this?
Pardon?
If this helps, can I turn this?
Yeah, sure.
Okay, sure.
Can do that. It's a good idea. That's better, I think.
So I can. Sure.
Can you just test your mic? Say something.
Can you hear me?
Yeah. Are we both audible? Okay, fantastic. So this has become a habit, especially if you're doing a lot of video conferencing. First you check the audio and the video, then you start talking business or whatever it is. So welcome, Nadeem.
Thank you so much, sir.
Pleasure to have you here. Friends, we are doing a fireside chat with Nadeem. He's a technology evangelist at Manage Engine. And we're going to talk about some of the security perspectives, some of the deeper security perspectives, some of the bigger security perspectives, and not drill down into a lot of technical issues. So Nadeem, let me start with a CISO perspective.
Okay.
In the current scenario, in the post-COVID scenario, in the work from anywhere scenario, what do you see as the emerging challenges that CISOs face? And what are the tangible challenges? What are the intangible challenges? What has been your understanding of this?
Okay, so when we talk about CISO facing the challenges, tangible and intangible. Right. So yes, there has been a lot of, with the recent work from home, there has been a lot of change over there. So let's take it this way. You know, there are a lot of threats which are happening nowadays.
Okay.
So when we talk about these threats, these are more of, if I compare the internal and the external threats, the internal threats are more than the external threats.
Okay.
I'm sure everyone will agree with me in that case. So if I even compare it, like say if I go to any of the Gartner or something, and if I compare the internal threats, they are almost about 60 to 70% than what anyone would face from an external perspective.
Okay.
Now from a CISO's perspective, he has to be, he has to look at the robust infrastructure and with regards to say people, processes, compliance, and on top of that he would have to manage everything into a cost effective and in the organizational cost perspective.
Yes.
That happens to be the biggest challenge. That's what I feel.
Managing it cost effective
way. Okay. So from all the perspective, like I said, people, processes, compliance, everything that is happening and in a very cost effective manner is a challenge actually.
Okay.
And with the number of internal threats going, especially with the work from home, especially with the hybrid working environment,
right,
that has exponentially increased.
Surprisingly, the cover story for our latest issue is on recruitment frauds.
Oh,
so that becomes part of the threat scenario that you're mentioning.
Correct.
That a majority of the threats come from within.
Internal.
And then recruitment is one part of that. So Nadeem, in terms of solutions, you talked about the tangible and intangible problems and challenges.
but what are the solutions, and what kind of solutions are tangible, what kind of solutions are intangible?
So talking about the tangible, or can I take it this way, a solution for an intangible, a tangible solution for an intangible thing?
Oh, okay.
I hope.
Yeah, please.
Okay.
Let's hear
So
that.
if I talk about it, the problem that we face nowadays is more about user behavior and like I said, just referring to the previous topic about what is happening from a user who is giving the information from inside. Like say for an example, a user is there, it's from a user's behavior's perspective, a user is there, he would actually, you know, by mistake he will be opening up an email, a phishing email.
Okay, yeah.
Okay, or for that matter, you know, he is accessing the company information on a personal device, which is not so secured. Now, this is again an intangible option.
Right.
Now, again, when he's doing so, he's bypassing all the security protocols and all the security checks.
Correct.
Okay, and that's what a hacker would require. Now, in this case, this can actually give them one spot, and the whole of the internal security system and data can be exposed. Now, in that case, you know, with the organizations going for a zero trust applications.
Okay.
Zero trust policy, sorry.
Right.
So with a zero trust policy, all these accesses and the privilege sign-ins can be referred or probably reserved for just-in-time privilege.
Okay.
So if a just-in-time privilege comes into a picture, you know, that will actually be one of the solutions. Also, I'll tell you from a CISO's perspective, you know, because from a CISO, he will not have to only look at all these things, he will have to probably look it from a perspective wherein he has to manage, like say, imagine there is a breach which has happened because of a user by whatever means that he is not aware of it. Now, CISO will have to, it will be more vulnerable. He will have to look at security policies, he will have to review the protocols and policies, he will have to retrain the users, he will have to sensitize everyone, and with the zero trust coming into picture, that's actually going to be helpful. So zero trust is the answer, where with the zero trust, you can, and with the privilege access and just-in-time privileges, all this, it can be a solution, a tangible solution to an intangible.
That is the tangible part of the solution.
Correct.
Which is much more powerful than
Actually,
the previous older level kind
exactly.
of solution.
So I may not have privilege only, you know, given to a user. Maybe I have something as a PIM-PAM or a just-in-time privilege given through a PIM-PAM solution, and make use of that.
So that's much more dynamic. Okay.
Correct.
So what kind of technology, what kind of algorithms, what kind of solution does Manage Engine offer to help CISOs, you know, take the guesswork out of decisions? How much of guesswork is still there for a CISO, and how can you help reduce it?
So I'll tell you what, there are actually, okay, I'll take it from a section wise. So let's say, example, taking from a company's perspective, there are n number of network devices.
Yes.
Different level, you know, n number of network devices which will work in conjunction together to provide a business services or to provide a proper operations, business operations. Now, when you talk about these services and these devices and these applications, there will be a lot of data which is generated.
Right.
Lot of logs which are generated. Now, these logs, like if there are a couple of devices, maybe you will be able to do it, but when all these logs come together, it's enormous amount of data. Now, with this enormous amount of data, it's very difficult to figure out where exactly the problem is, where is it more vulnerable.
Okay.
Okay. Now, in that case, if there is an SIEM solution, so with the SIEM solution, you will be able to figure out, okay, where exactly the problem is. You will be able to identify what are false positives, what is actually the area where you are having a pain, where you have to fix the gap. So SIEM solution is one of the solutions that we have to offer.
Okay.
Okay. Now, coming to the next perspective, if I have to think about, it will be more from an Okay, because a lot of data will be there in the BFSI sector. So in that case, users privilege is also another way of looking at. So like say, if you have access management, I would say rather, so you need to make sure that you have the right people, have right access.
That makes
sense. And maybe not many people are there, they have got access to different databases, different customer information. So having an identity and access management solution will actually help. So it will be able to judge as to what is happening, where is it not happening. It will be able to, take care of all the anomalies over there. You'll be able to fix where the gap is. You'll be able to see and you'll be able to, if there is any abnormality, so the solution will learn what is happening, how is it happening.
So it's not static, it's dynamic, it's
dynamic,
learning.
it's self-learning. If it realizes that there is a problem, like more of user behavior analytics. So like say Nadeem logs in morning at 9 to 6. One fine day there is a login at 10 o'clock in the night. Red flag.
So that becomes an abnormal activity.
So if I talk about it from Manage Engine perspective, an SIEM solution or an identity and access management solution will actually help.
Okay. So is this SIEM and this management piece?
Identity and access management piece.
Okay.
So if you talk about identity and access management, the three key components over there, that is one is identifying, authorizing, and all these things will actually
part
of it.
Let's talk a minute about the regulatory perspective. What is it that you can help a CISO stand in front of a regulator and be confident about what he or she is managing, and give the regulator also some confidence that yes, this organization is fairly secure?
Okay, so I would say in one word that Manage Engine will help you stay compliant. I'll tell you what. Okay, let's talk about both the aspects of it and how are we going to help you. So when I talk about regulatory, like let's look at from an industry's perspective, you have got PCI DSS, you have got HIPAA, you have got RBI guidelines,
yes,
SOX, n number of things are there.
Correct.
Now actually they're good. You should be doing it because reason being they are market standards, and plus of that they are evolving. It's more from crowdsourcing.
Yes.
It will help you to thwart any external threats, and it will help you to take care of the internal threats also. Now again, that is good for especially talking about BFSI sector. So it will make sure that right people have right access. Now it will make sure that you do not have the customer's information going out to anyone else. On top of that, it will help you to avoid any penalties.
Okay, yeah.
Okay, and specifically about BFI sector, it will help you to keep your role active as in privilege or as a trusted brand.
Okay.
Of salt. Okay. So when I talk about the offerings, or probably when I talk about how it can help, so Manage Engine, we have got different ways and different means and different applications, which will actually based upon industry, and it keeps on evolving.
Okay.
So Manage Engine will help you stay compliant.
When you say evolving, that means you're keeping track of what the regulators are asking for, and you're building those kind of.
Exactly. So example, you have any solutions. So some solutions will actually tell you out of the way, okay, are you compliant, what you need to remediate.
Okay.
So all such things will actually. So when I talk about Manage Engine, it can help you to stay compliant.
So how much assurance does the solution give to the company overall? Can the company have some kind of confidence level, and it can tell the board or it can tell the management, yes, that this is your level of security?
Absolutely. So when you talk about it, will do the analysis and tell you, okay, this is what is there in the solution, how much you are compliant. In case there are any anomalies over there or not so proper behavior, it will tell you that. It will even tell you, suggest you some remediations also.
That's nice.
Okay. So when you go in front of the management, you will have the proper graph and proper visibility of the data. So when you approach someone, you will approach with the data, black and white data. And I'm sure that will make an impact.
I think that's what most managements would be looking for, because it's all very technical and no one else wants to get into all the technical details. They want
it's more about everything comes in a dashboard, which is giving the right information and with the right amount of data.
Okay, great. Thank you, Nadeem. Thank you so much.
Thank you.
Thank you so much for this conversation.
Thank you so much, sir.
Thank you. Thank you.
Thank you.
All right, so I hope you have enjoyed this fireside chat. And everybody, now we have reached on to another important segment of our first, I should say, the first part of our event, the Technoviti Awards. And now we will be doing the Technoviti Jury Felicitation. To do the Technoviti Jury Felicitation, I'd like to invite on stage Babu sir and Manoj sir. Can we have you both on stage, please? So everybody, you all know about Technoviti Awards. After 2 years, they are coming back on stage. This means they're doing our physical event again. I hope you all are making the most of it. Just to tell you all, in case any of your friends and anybody wants to watch this event live, so we are live on the Facebook and other social media platforms, so you can watch it. Watch all the speakers, all the presentations there itself. And now, as I said, we'll begin with the Technoviti Jury Felicitation. We have Babu sir on stage. And can we also have Manoj sir on stage?
May I request Manoj Agarwal to also come on the stage, please? Yeah, please, let's call the jury as well.
All right, everybody. So you know what Technoviti Awards are, and this year's jury is here. Now, you'll be meeting them, you'll be watching them on screen, and here on stage also. These are the ones who has helped us decide on the innovators of this year's Technoviti Awards 2022. And now here we begin, so the Technoviti Jury Felicitation. So firstly, I would once again like to insist you all to please clap as you see all the juries coming on stage. So firstly, I'd like to invite on stage our jury, Vinod Kumar, the CIO, Fino Payments Bank. Everybody welcome Mr. Vinod Kumar.
We will first invite every jury member to the stage. We will then have a jury unveiling of the report, and then we will felicitate them, and then we will start with the awards.
All right, so let me call all the jury together then.
Welcome, sir.
Can I also have Mridula Sharma, COO, Arca FinCap?
Mridul Sharma has to leave for a board meeting.
Okay. Can I have Mr. Ram Rastogi on stage, the digital payment strategist and thought leader from FinTech Association for Consumer Empowerment? Once again to tell you, they all are our jury for the Technoviti Awards 2022. Now I'd like to invite on stage Topendra Bhattacharjee, the head digital bank, RBL Bank. Welcome on stage, Mr. Topendra Bhattacharjee. All right, now I'd like to invite Mr. Prateek Agarwal, Founder Director, Truths Advisors. Now, can we have Mr. Vasant Jayapal, the CEO, CamSpay? Mr. Vasant Jayapal? Can we please have on stage now our next jury, Shivangi Kamath, Head Process Design Architect and Excellence Group, Tata AIG General Insurance. If you know if they are around, please just tell them that we are calling them on stage, if you can help, please. Anyways, can I also have on stage our next jury, Sachin Seth, former partner of FinTech and digital leader, EVA India. So let's welcome KV Deepu, President Digital Bajaj General Allianz Insurance.
Please,
welcome,
your
sir.
Name is announced. Please come.
And last but not the least, I'd like to invite on stage Mr. Sushil Zoregaonkar, Director, EY India.
Sushil Zoregaonkar. I think, may I request the team to kindly invite Sushil and Shivangi?
Yeah, I request somebody from our team, please find Mr. Sushil and Ms. Shivangi. Ms. Shivangi, can we have you on stage? Are you around?
Sushil also
I
please
think
join
Sushil,
us on
yeah.
the stage, please.
Once again, I request Shivangi Kamath and Mr. Sushil Zoregaonkar to kindly join us on stage.
Come, Vasant. Vasant Jaipal.
And here we have Vasant sir also. So I think everybody, let's give a round of applause to our jury members. Here we have our esteemed jury right in front of you. And now, as Babu sir has said, Babu sir, it's time for us to firstly do the unveiling of our Technoviti Compendium 2022. So let's do that first. I request all the jury member and Babu sir, everybody kindly come together and let's do the unveiling. Welcome, Manoj sir.
Manoj, please join. Yeah.
As I would like to tell you that this compendium has the details and the names of all the innovators and all the innovations that has took place in this year, 2022. So yes, that's indeed an important compendium. You will also have a copy for sure. So let's do the unveiling first. Yeah, can we have some energetic music in the background if possible? Yeah, that's a big moment for all of us. Thank you very much.
One copy.
And now we'll do the unveiling. Let us make it a big moment and let me do 3, 2, 1. Yeah, can we do that? 3, 2, 1. I wish we would have had some, firecrackers around. Here we have unveiled the compendium, the Technoviti Compendium 2022.
So this is a compendium comprising of the top 22 innovations that have been chosen, and this is also available with the QR code. The QR code will also be flashed on the screen and also on the reception counter or at the main gate. So please do take a look at it, and it is also there on our website. It can be downloaded by everyone. You can take a glimpse of all the innovations through this compendium.
I'm sure we all are very inquisitive about what it has inside it. Yes, please, let's have a picture with this compendium.
Picture, please.
Yes. Let's have a round of applause once again, everybody. This is our compendium. You all know this calls for lots and lots of hard work. All our innovators have put into it, right? So yes, wonderful. Here we have the Technoviti Compendium 2022.
Great.
And now we will felicitate our esteemed jury members. I request Babu sir, you and Manoj sir, please come forward.
Yes.
And let's felicitate all of them.
Mr. Vinod.
So next up, you know after what's going to be happening after this, Technoviti Awards 2022. And I'm sure many of you here are waiting for that moment. Many of you will be receiving that award.
This is something. This bag is something. This is something.
Thanks to all our jury members. I'm sure it would have called for a lot of work, a lot of thinking process to decide on who should be the best innovators of Technoviti 2022. And now in a few minutes, you'll be getting to know all their names, that who has got these awards. So once again, thanks to all our jury members for putting in all that hard work behind. Once again, I'd like to introduce all our jury members. We have on stage with us, we have Mr. Vinod Kumar, we have Mr. Ramras Togi, Mr. Topendra Bhattacharjee, Mr. Pratik Agrawal, Vasant Jaipal, Shivangi Kamath, Sachin Seth, KV Deepu, Sushil Zoregaonkar, and along with that, we have from Banking Frontiers, Babu sir and Manoj sir. Now, everybody, after this, brace yourself as one of the most important moment is about to arrive, which is the Technoviti 2022 Awards ceremony. I am very excited. I'm sure you two are. So
Great.
let's see who has got it all.
So let's begin the session. So we
All
can
right,
request
thank
the
you all
jury
our
to-
jury members. You may now take back your seats, and thank you,
We will
Manoj
just-
sir, Babu sir, for doing the honors. Thank you very, very much. And here I've got the list.
We will request jury members to please stay for 20 more minutes.
Yes.
Below, we will call two of you to give away the awards. Thank you.
Absolutely, absolutely. Thank you for adding that, sir. Now, I think Babu sir, Manoj sir, you'll be here, right? Okay. And now I'd like Mr. KV, Deepu and Ram Rastogi to please join Manoj sir and Babu sir on stage as we begin the Technoviti Awards 2022. I want you all to give a roaring round of applause. Come on, everybody. Show some energy. Yeah. Don't worry. In few minutes, we are announcing for the lunch break. Chill. Okay. Okay, so here we have our presenters. Now it's time for us to announce the awards. So here we begin announcing the names of our Technoviti Awards 2022. To begin with, the award goes to... The organization is Data Sutram, and they get this award for the innovation Data Sutram platform. Everybody, let's welcome on stage Data Sutram. Congratulations. I want you all to please, at least for this one, we shouldn't stop clapping. You all know how much hard work it takes for all of them to create such kind of innovation, you know, right? Big round of applause. Here we have the team Data Sutram. Congratulations. Very well done. The next Technoviti Award 2022 goes to First Hive Tech Corporation for the Innovation Customer Data Platform, CDP. Congratulations, First Hive.
Welcome, sir. Now we will have to play the clap on the music system, or we can clap.
Thank you, Babu sir. That was a real nice way to motivate everybody to clap.
Each and every innovator has really worked very hard, and they really deserve a clap. And more harder than them has been the work of the jury to go through all this nomination. They have really taken a lot of effort. Thank you very much, all our jury members, for that.
All right. Moving on to the next one. The next award goes to Gupshup Technology India Private Limited for their innovation, Gupshup One-Click Bill Pay. In just one click, you can pay the bill now. So everybody, round of applause for Gupshup Technology India Private Limited. I really like the name. It's very interesting. Gupshup. Yeah. The next award goes to Global Software Solutions for the Innovation Veracious Payments Hub. Everybody, let's congratulate with a big round of applause Global Software Solutions. Congratulations, Global Software Solutions. You should clap for them. Because I believe in karma. If you don't clap for them, they won't clap for you. Okay, it goes that way. So I'd like to thank KV Deepu sir and Ram Rastogi sir for doing the honors. Thank you very, very much.
Mr. Vinod.
Now moving on to the next set of awards, and for that I'd like to invite our next jury members, Vinod Kumar sir and Mridul Sharma sir. A very welcome on stage. Our
Mridul
jury.
is not around. He
Okay.
had to leave.
Okay, so just Vinod sir, can we have you on stage? Okay, so we have with us Vinod sir, Mr. Vinod Kumar, and here we go. So the next award goes to Tata Communications for their innovation. I hope I'm saying it right. It's IZOTM Financial Cloud. How do I say? Should I say it this way or correct? Okay. So IZOTM Financial Cloud is their innovation. Round of applause for Tata Communications.
Narendra sir, why do you also not join us? Come, please come. Mr. N. Narendra, the former chairman of Indian Overseas Bank. Sir, please come.
Congratulations, Tata Communications. And moving on, the next award goes to Orient Pro Solutions Limited for the innovation iCash Pro Plus. Let us all congratulate Orient Pro Solutions Limited. Background sound, very nice. Congratulations, Orient Pro. Moving on, the next award goes to Lentra AI Private Limited for their innovation. Okay, I love the name, but I hope I'm saying it right. Go, no, go. What a cute name. Everybody, let's congratulate Lentra AI Private Limited for their innovation. Go, no, go. All right, once again, congratulations, Lentra. And moving on to the next one, the next award goes to Sky is Limit Technologies Private Limited for their innovation Sales Focus. The spelling is SALESFOKUZ. Aha, lovely, very, very interesting and unique name, Sales Focus. All right, so thank you very much, Vinod sir, for doing the honors. You may now take your seats. Thank you very, very much. And now, for the next set of awards, I'd like to invite our jury members, once again, Mr. Ram Rastogi, and to join him, Mr. Sushil Zarigaonkar from UI. All right, so here we have our jury members and the presenters of the awards, and now we start. All right, and the next award goes to Ease Bars Private Limited for their innovation in Stock Collect. Congratulations, Ease Bars Private Limited. Very well done.
It's Easy Bus.
In Stock Collect. That's the name of their innovation, which is another interesting one for sure. Congratulations! And why have we stopped clapping? You didn't like the name, InstaCollect? Please appreciate. You know the power of appreciation. It's incredible. Okay. Congratulations, Isbas. And moving on, the next award goes to Credgenics, Analog Legal Hub Technology, for their innovation, Credgenics SaaS platform. The innovation name is Credgenics SaaS platform. Congratulations, Credgenics. The next award goes to eVia Softtech Private Limited for their innovation Temple Token. The next award goes to Temple Token. Congratulations, eVia Softtech Private Limited. The next award goes to Karza Technologies for their innovation Video KYC. Congratulations, Karza Technologies. Congratulations. All right, now I'd like to thank our jury members, Ram sir and Sushil sir, for doing the honors. Thank you both of you. Yes, so now I'd like to invite on stage Topendra Bhattacharjee, Prateek Agarwal and Vasant Jayapol to present the next set of awards. Let's again welcome our jury members back on stage. We're really happy to have them with us. Okay, here I announce the next set of awards, and I really urge each one of you to please clap as loud as possible. Trust me. As I said, I'm motivated before also. You know, that's good for your health. I don't know if you remember or forgot it, but anyways. The next award goes to Montran Corporation India Private Limited for the innovation Corporate Collections.
Collection is the biggest. After all lending, it is collection.
The next award goes to BCT Digital, Bhavan Cybertech Group for their innovation, RT360 Credit Risk Suite. I hope I'm saying it right, yeah? BCT Digital?
It's Bhavan Cybertech Group for their RT360 Credit Risk Suite. Bhavan Cybertech?
Bhavan Cybertech Group, are you on? Okay, moving on.
Let's move the next.
Yes, let me announce the next award. The next award goes to Allied Digital Services Limited for their innovation, FinOlite Conversational Banking Platform. Round of applause. Come on, come on, come on. Let's not stop. and the innovation is Fino Allied Conversational Banking Platform. Congratulations. And with this, I'd like to thank Topen sir, Pratik sir, and Vasan sir for doing the honors. Thank you very, very much. Now, I'd like to invite Shivangi Kamath and Sachin Seth to kindly come on stage and present the next set of awards. All right, as we have the presenters on stage, let me announce the next award. The next award goes to IDBI Intech Limited for their innovation, ERM Enterprise Risk Management. Come on, yes. I know you all can do it better. Yeah, we can do it much better. Make it real louder. The applause I'm talking about. Congratulations. The next award goes
All
to...
the lending creates risks, and risk needs risk management.
All right, the next award goes to Ospin Technologies for the innovation, Ospin Docs Low-Code Content Services Platform. Congratulations, Ospin Technologies. And the last but not the least award of Technoviti 2022 goes to Ascent Business for the innovation, Ascent Auto BCM. Come on, come on, come on. Don't worry. After this, we have the lunch break. Chill. Congratulations, Ascent Business, and thank you, Shivangi ma'am and Sachin sir for doing the honors, and Babu sir and Manoj sir. Wow, what a moment it has been, so many awards. Would you like to say something?
Thank you everyone for making it such a momentary Technoviti 2022. It is really very heartening to see all of you assemble here in person. I think we missed this enjoyment, we missed this excitement, we missed this networking and that feeling of being together in person. Great. Thank you very much for all that. May I request Manoj to formally share the word of thanks.
Thank you, Babu. Getting an award digitally will not give you that kind of feeling that getting that award physically in front of a live audience. And that is something that everyone, we at Banking Frontiers, I'm sure all of you missed during the last 2 years. It was a very unfortunate situation, something that completely beyond control of any of us. But I'm thankful that humanity as such has managed to overcome this problem. When you look at this problem from a historical perspective, what happened 50 or 100 years ago, it was really a huge problem. So kudos to the entire medical community and the healthcare community for giving us back this kind of freedom, this kind of networking, this kind of socializing in the physical world. Of course, we socialize in the social media, but socializing in the physical world is completely something different. I am deeply appreciative of our jury members for their efforts, for the guidance, for picking out the best of these innovations, and even more appreciative of all the nominations that have come in. I'm sure even more nominations would have come in if people were really aware and expecting that there would be a physical event of an awards giving ceremony. When we first floated the Technoviti and Finoviti awards, we ourselves were not sure whether we'd be able to organize a physical event because there was Omicron and this and that happening all around, all over the place. So we said we will do the event digitally at the worst, and if all goes well physically, I'm happy. God was kind enough, everything worked out, and we're here in this beautiful hotel, in this beautiful venue with all of us together. So thank you all very much for being part of this. There are different stakeholders, different people have come together, played different roles. I'm also thankful, which has not been mentioned, to our Banking Frontiers team, which has really done a whole lot of background work and put this show, put this conference in front of you. So thank you, Banking Frontiers team as well. Thank you, everyone.
So one more interesting thing is this happens to be the 20th year of founding of Banking Frontiers. With all your support and all your wonderful, participation with us. So thank you very much for making it. And we will make sure that 20 years are over, but we will be young forever. So we will keep working towards creating more and more such kind of platforms. Thank you very much, everyone.
All right, cheers to Banking Frontiers, 20 years and counting. Very well done. And I'm sure you all are very hungry, but before that, let me tell you, after the lunch break, we have the next big thing, which is Finoviti Awards 2022. So I am sure we have so many leaders from BFSI industry already. Another Finoviti is also going to be a big one. So everybody enjoy the lunch break, and I'll see you back after maybe 20-25 minutes. So yes, enjoy the lunch. As they say, lunch hour is the best hour. See you back after almost 25 minutes. Thank you so much.